Welcome back to another Stock Market Open Live, and Trump's first trade deal reveal is expected to be the United Kingdom. The Trump meeting starts we'll write this down, in the Oval Office at 7 a.m. PT, so California time. And we'll get to cover it. We'll get to see what's going on. In the meantime, we'll take a peek at some other news. But we'll be live all the way through that, and then we'll do our course member live stream after that, and we'll do sort of our course member analysis on what the heck is going on. But obviously, a lot of enthusiasm over the first of deals, which makes sense because obviously when we got liberated, we all had some serious heart palpitations, and now it seems like we've got some anti-liberation going on, or at least hopefully that's sort of being branded as. So let's see how juicy we can get this deal to actually be. You've got good old Teddy Cruz chatting up on Squawk. Let's take a brief listen to him.
Destroy humanity. And I got to say, Elon said 10 to 20%. That kind of scared the hell out of me. Wow. But my view is simple. If we're on that path, if they're going to be killer robots, I'd rather they be American killer robots. I don't want killer robots, but we're not going to suddenly stop progress just because we're scared of it.
Senator, let's just shift gears quickly if we can. I mean, all things tariffs. I'll direct you into a talk about Medicaid and some of the stuff we're hearing. I mean, the title of the piece is Trump's worst idea since tariffs, and it has to do with price controls on Medicaid drugs. You know, the Journal has been negative on tariffs all along. There are a lot of populist things coming out of the administration, well-intentioned because of what's happened to to a lot of working people across the country. We understand all that. But that doesn't mean you should embrace populist ideas that are more popular or had been more popular in the Democratic Party than the Republican Party. Can you put a governor on some of this drift?
What?
Yeah, so there was a lot of things in that question.
Yeah,
so let me take a couple of pieces of it.
Yeah.
Let me start on the tariff piece and then go to the Medicaid piece. On the tariff piece, I think we're at a fundamental fork in the road, and there's one path that is very, very good and one path that is very, very bad. The path that is good is President Trump has greater leverage right now than any president in our lifetime to negotiate lower tariffs with our trading partners. We're expecting an announcement about the UK later this morning. Yeah. And what I have been urging President Trump, use that leverage, negotiate dramatically lower tariffs with our trading partners, use the fact that you've threatened these tariffs to lower them in exchange. And if we end up 30, 60, 90 days from now with significantly lower tariffs worldwide, that will be an historic win, an economic win for jobs and American business and productivity that we've never seen before. That's the path I want President Trump to take. Yeah. There is another path, and there's a camp within his administration that doesn't see tariffs as a means to an end, doesn't see them as leverage, but rather sees them as the end, is happy with high tariffs as a permanent feature of economic system. I think path number 2 would be an utter disaster. So I am regularly and daily urging the president, use the leverage.
Good. I love this.
Now let's shift to Medicaid. You asked about Medicaid. I think we are going to see significant Medicaid reforms as Congress takes on budget reconciliation and extends the tax cuts. And there are 2 elements that I think are critical. Number 1, rooting out fraud in Medicaid. There's massive fraud, particularly blue states like California and New York, have really exploited the Medicaid system, exploited the federal taxpayers. And I think we're going to see Congress crack down on the fraud on people who aren't eligible for Medicaid, nonetheless being on it. But secondly, and I think this is another thing we will get done, is work requirements. Putting work requirements in place for Medicaid, I think, is hugely important because you are not helping people by having them sit at home on the couch. And the best thing you could do for someone who is not working is incentivize them to get back to work, to get a job, to provide for their families. I think we'll see Congress do that as well.
Well, Senator, maybe the same group that's whispering in the president's ear about what to do with the tariffs, the permanent tariffs, maybe they're the same ones talking about not extending all the tax cuts from 2017. There are some that are talking about a millionaire tax, which is a Democrat idea. They forget that small businesses use that they would get a tax increase under that. And then this most favored nation idea for drug pricing, for Medicaid, that's akin to importing drug price controls from Europe, which hasn't innovated on a drug in I don't know how many years, maybe Wegovy or Ozempic or something.
So, Joe, you are exactly right. It's the exact same people in the administration that are arguing, number one, for high tariffs forever. And look, they're fundamentally, tariffs are taxes. If you leave tariffs in place forever, they're just taxes on the American people. So yeah. I'm all for tariffs as leverage to get lower tariffs from other countries and to open up their markets. That's good for Texas. It's good for America. But there are those in the administration who, just like tariffs, want trillions in new taxes. And they're the exact same people who are saying, gosh, we should raise taxes on the top level. And that would be a tax on every small business, every job creator. And you know what? That's what Kamala Harris campaigned on. That's what she promised. And I got to say, the folks in the administration, they've decided to call themselves populist, but just being a Democrat and wanting higher taxes and more regulation, that's not populist. That's embracing the failed ideas of Jimmy Carter and Joe Biden. Let's not do that. Let's be real populist, which means fighting for blue-collar workers and jobs. That's what I'm doing every day, and I think that's exactly what President Trump is doing as well.
Wow.
Well, Senator, have you had that conversation with President Trump? Because clearly he's not doing exactly what you're saying.
On which piece?
Couple of them.
Well, a whole bunch of them, right? There's still a conversation. The tariff piece is right there. You just said that you don't like the tariffs and you'd like them to be negotiations. He is trying to negotiate, I guess, but I think we still don't know. If you look at some of the tweets or Truth Social posts this morning, he's very happy about all the revenue that he's bringing in as a function of those tariffs. So remember, we've had this sort of incongruity about what's really happening here.
So Andrew, your point is fair. There is a divide in this administration. There are two camps on tariffs. By the way, there are also two camps on raising taxes. And I think the same camp is wrong on both of those. I believe that President Trump has an historic opportunity. I can tell you we have over 130 nations who have come to the White House, said, let's make a deal. We want to lower tariffs. We want to open up our markets. That is extraordinary, and I don't know which path we'll go down. I pray we don't go down the path of massive taxes and massive tariffs forever. If we go down the former path of using this leverage, there would be a rich irony if Donald J. Trump ended up the most free trade president that this country has ever seen. He has the opportunity to do that. You're right, we don't know yet, but I got to say a lot of folks in the media are ready to say, oh, we won't see that happen. I am hopeful. I've had that conversation multiple times with President Trump. There are a number of other people, including Scott Bessent and Elon Musk, who are urging the president, you have an opportunity to win one of the biggest wins for American workers we've seen in our lifetimes.
Yeah, you're right. And we
this
can
is
see
good
it playing out that there are obviously on any given.
I love hearing this. This is great.
Spoken to the president last, it seems like, and there's opposing. Maybe it's good. You don't want everyone, that's what another thing we might see on some of the other sides where they all seem to be, the board collective every time they vote. All right. Yeah. Senator Cruz, thank you. Thank you.
Thanks, guys.
All right. Thank you. Coming up next.
Yeah, I mean, to me, what we just heard from Cruz is actually quite bullish because what you're seeing is this push inside the Republican Party to help Trump maybe realize the error in the ways of relying on tariffs as revenue, right? And instead of using revenue or tariffs as a revenue driver, using tariffs as just simply a negotiation tool, which was a lot of what we originally thought, and markets originally thought is, okay, all right, tariffs are just going to be an announcement on like, it's just going to be, even if you go back to the campaign, the idea was, all right, we're just going to use tariffs as a weapon to get lower tariffs. The problem is it sort of evolved into, this Howard Lutnick style approach of, oh, well, we're going to make so much money from tariffs. We're going to be able to lower taxes. That's the goal. We're going to go back to making most of our money from tariffs. And, that's been basically concluded as loony. So now, if you could get Trump back to the idea of, hey, let's get to a better free trade standard than where we were before. Great. And I guess that's what we'll see in the deal today. You know, are we going to see a framework or a concept of a deal? Donald Trump says it's comprehensive, but is it comprehensive in terms of, hey, we'll get a comprehensive deal in the future, and today we're only going to agree on auto tariffs? Or how much of this deal is done? Like, are we celebrating that the deal is 1% done, or are we celebrating that the deal is 100% done? Obviously, those will be some significant differences. So we'll see. Anyway, let's go. I want to take a look at Carvana. Take a look at this. I mean, Carvana went all the way down to this 146 line here on the retracement. But now, after today's earnings, we're going almost back up to the top of our retrace line here. And you're sitting at 273 on Carvana. I think it's probably worth taking a look at what we got here in terms of earnings. But then I also want to see what's going on with guidance. So let me go start with guide. We also had our jobless claims coming in at 228, slightly under the 230 expectations. Came in at, again, 228, 13K under the last read and 2K under expectations. Carvana. So let's see what we have here. So Carvana Q1 EBIT 488 versus 437. Q1 revenue 423 versus 395. So beat on top, beat on bottom. Retail sales beat with 134-ish thousand vehicles versus the 126 expected. Any forecast though? Sees stronger profit on used car and loan sales. Earnings likely to double in 2025. Wow, that's incredible. So let's take a peek at some of their actual numbers. And who are they talking to over here? Let's see. I don't know. Yeah, let me pull Carvana up really quick. Carvana. Oh, how convenient. That's what we're talking about.
Oh, wow. I think it's pretty different than that, but I think your last guest hit AI and tariffs. Now it's time to give people what they want and hit used cars. I think we're in a great spot. We had an incredible quarter. This last quarter, we were about twice as profitable as the average outside of us automotive retailer. We grew at 46%. The second fastest automotive retailer growth was 6%. The team's done an incredible job. We're in a great spot. We've got big goals in front of us. We're going to go tackle those goals, but things are great.
But what do you ascribe this sort of big move in the business?
So I think.
All right, we're going to go ahead and get the actual financials up here. I want to see the financials. So I am less interested in hearing them yap about the business than actually seeing what's going on in the funnies. So let's take a look at this. We've got sales and operating revenues. We're sitting at 298 billion. I mean, this is frankly an explosion in the top line here. Now, keep in mind, when you have a business like Carvana, you want to look at profitability, because you could do more business. This doesn't mean you're doing more profitable business, right? So profitability matters here. Because that top line is based on really just how many cars are you buying and how many cars are you selling. It's like flipping, right? So like Open Door can just buy more homes, and then it looks like their revenue goes up because they're going to sell more homes, right? So what we want to see is a profit. So net sales, costs of sales. So the difference right here, this is the number we care about, gross profit. So 929 divided by their total sales of 4232, that puts them at about a 21.9% margin. Honestly, that sounds pretty good. 591 divided by 3061. Yeah, that's an increase of about 1.2% in margin. So they're actually getting more profitable Q1 to Q1 on selling these, on flipping cars, basically, is what they're doing. They're a car flipping business, right? Their operating income, yeah, this person's right, definitely more than doubled. And their net income, wow. I mean, that's like an 8x on net income down here, 375 versus 48 mil. Really good. If we look at, let's see here, cash flow, 232 mil, property and equipment only 27. So free cash flow is over 200 million bucks. Assets, we've got 1858 cash equivs, and we've got bills to pay of around 13. So we got some free cash and we got vehicle inventory here. A lot of long-term debt though, 5.2 billion bucks. But I have to say these numbers don't look bad. Let's go back and listen in briefly here, but that doesn't look too bad at all.
I think that's directionally correct. I think to the extent new car prices go up, I think generally that would also pull up used car prices, but less. I think that would likely drive a substitution into used, which is what you're suggesting, which we expect would be positive. I think the sum of that is unclear, how that adds up, and is that a net positive or negative for us? But the thing that I think that we try to focus on is we know we can impact our customer experience every day, and so we try to stay really focused on that because we feel like we have 100% visibility and knowledge about how that works, and we'll see how tariffs work. But I think reasonable arguments could be made for us that it's a positive. I think reasonable arguments could be made.
Yeah, I actually don't think he's wrong. I mean, really, Carvana is a used car player. And if you increase used car prices because you're making new cars more expensive, you're not, well, of course, you're creating some form of inflation, but you're, I think, probably making the revenue per vehicle higher and potentially not only valuing their inventory higher, but potentially enabling a higher profit margin on higher revenues. Not necessarily true that the profit margin is going to go up, but I think there's a potential because you're creating more of a wedge between the used and the new car market, which enables you to potentially take more. And they could be a beneficiary of that. So 2025, their EPS is expected to be $4.06. They're trading for 68 times. 68 times. Their EPS growth, though, is expected to be pretty high. We're looking at 36 on EPS growth. So you're trading for slightly under 2. It's, it should probably be trading for closer to 169, so slightly lower than probably where it is now. If I run the numbers just on a peg basis at 36% growth, probably under 250 is a better deal, but not bad. Still a little bit elevated on that longer term debt, but yeah, they're obviously really growing and on top of that, potential beneficiaries here of tariffs. Another beneficiary of tariffs that we have seen the markets just continue to reward is Netflix. This is something we've been talking about for a while, certainly since earnings. But after earnings, this was a $940 stock, and there is of course this belief that Netflix is tariff immune, and that may be true to the extent that it's not recession immune, but we don't know that a recession is a foregone conclusion now, especially if we can get a lot of trade deals and then you end up sticking a soft landing. It's still possible that you could prevent a recession by starting to undo some of the damage of the trade drama. We'll see. So let's take a look at AppLovin. Here's another one that had some pretty devastating short reports back here when it was up in the 500s and dropped to about the 180s. Now sitting at about 346, up 14% in the afters here, or pre-market rather. Let's go jump into some of the AppLovin deets. While I pull up AppLovin, let me just listen to this for another moment here.
For a long time, and I think our goal is going to be to make sure we have access to all those different cars, make sure that we put them in front of customers, let them make the right choice for them.
Appreciate it very, very much. Thanks. Squawk Box, come on.
Oh, they cut him off hard. I also want to quickly just write down, you can see me write this down too if you want. I want to quickly write down just some quick bottom lines that we saw there on Carvana. Their gross profit increased, what did we say, it was 1.2%. And then free cash around 500 mil with 200 mil cash, free cash flow. Longer term debt still 5.5, and we'll just put the little squiggly line here. Bill, and then maybe this idea of potential tariff beneficiary by used inventory, potentially higher margins. We'll see. So okay, let's now I'm gonna pull up AppLovin. Investor relations. Okay, so let's see here. We have the AppLovin Dengu. All right, there we go. So let's see what AppLovin has. This is a software stack, advertising on apps, revenue. This is pretty explosive right here. I mean, look at that growth. 10, what is that? 1484 divided by 1058. That puts us at 40% growth, which is really impressive. And then you've got net income. They doubled their net income. So they grew the top line 40% and they doubled their net income. That's awesome. You know, this is one of the reasons why I think you saw this sort of remarkable explosion in the stock earlier this year before the short reports. What is this? Victory Day for World War II? Oh, okay. He's just making sort of a proclamation. Today, our nation proudly commemorates the 80th anniversary of the Allied powers' triumph over socialism and fascism in the wake, blah, blah, blah. Okay. All right. Sorry, I just have those notifications on for Truth Social. You know, you kind of got it these days, you know? Anyway, so let's see here what we have. Okay, so we're gonna keep going through this stock here in just a moment, but I want to see some of your comments here. This is the kiddos and the wife doing really good. The babies have finally started liking being thrown up in the air, and then I like to kind of fly them around. They love that. I tell them every, you know, they're 14 to 16 months. That's actually more like 16 to 18 months old now. I tell them, so Dad's a pilot, so you know I'm gonna fly you around. All right. Anyway, so cool. Let's see. Let's also just make sure our volume's okay. There we go. It's probably better at this. It's a little hard to find the exact balance of where we want to be right now. I don't want to be too low. This is probably okay, right? There we go. Because I know we don't want to peak, but there we go. Okay, cool. All right. So, okay, great. Andrew over here, Baldwin says the 8% drop on Google is way over a balloon. Yeah, I'm gonna make a video on Google and then a separate one on Palantir because it is interesting. It usually sell-offs are overblown, and that's a pretty big stock to drop 8%. So we'll see. But anyway, keep in mind we've got the Trump event coming out, or you know, the announcement coming out in an hour now. So let's keep looking at this here. So EPS 170. Let's see what multiple this thing is selling for right now. This is, let's see here. Okay, app. By the way, if you want to join these live streams, you're not going to get all of the notifications for videos. So if I drop that Google or Palantir video, there's almost no chance YouTube's going to send you them all because they limit notifications to 3 a day. And if I post 4 videos a day, you're just not going to get a notification for the 4th one. If you want those, download the Meet Kevin app. You know, even if you kind of just have it in your sort of summary, you can at least see the titles. That's on the Android and Apple App Store. Okay, so AppLovin is expected to bring in $7.40 of EPS. $7.40 of EPS for this year at, call it 347, puts us at a stock that's trading for 47 times, but its EPS is expected to grow over the next 4 years by 29. So 47 divided by 29, 47 divided by 29. That still puts this at a 1.62 peg. You know, Carvana was at, I think we had Carvana at a 188 peg. So it's cheaper than Carvana. Peg of 188 on Carvana based on next 4 years and this year's EPS. Growth, next 4 years. Growth. And then AppLovin, we have a peg of 166 based on the next 4 years growth. So not unreasonable should those Wall Street estimates hold. And so far, with what you're seeing with this AppLovin, these AppLovin numbers here, it's actually pretty incredible. Look at this. Their sales and marketing actually fell in Q1 versus last year. That's pretty remarkable. They did take an impairment here. And if it weren't for this impairment of 188 mil, their profit would have been even better. I mean, whatever they're doing, they're printing money here. Let's look at their cash flow. And it'd be nice to know what that impairment is too. But also look at the balance sheet here. We got $2 billion free. I've got payables of about 1.4. So you get about 600 mil free cash, 3.5 debt. And then we've got net cash provided by operating activity. I mean, this is incredible. Look at that cash provided by operating activity, $831 million. That's insane. This is whatever they do is a cash cow. Very, very good. So good for them. Okay, cool. Then let's see here. Somebody says, Andy says, Robotaxi will not launch, you morons. Oh, Andy's not very happy about Tesla, I guess. Okay. So broadly, though, the market's happy today because hopefully we get a large and, as Donald Trump says, comprehensive deal. We'll see how comprehensive it actually is. Bell's in about 24-ish minutes. And then, of course, Trump comes at 7 a.m. So we'll see. Okay, let's go. What's Goldman Sachs on the Fed? Let me listen to this for a moment.
Survey stuff.
Exactly. It's not necessarily unusual to have this limbo period where things seem to be hanging in there. Look, in October of 2007, I don't think we're headed for anything like what we were headed for then. But the unemployment rate was under 5%. You know, it's still it's sort of. You know, that's why when unemployment starts to blow out, you don't want to dismiss it, but it hasn't yet. So I do agree with that. The market's pretty much there, too, sort of saying, OK, July, maybe it looks like it gets tricky after that because you don't have a Fed meeting in August. It's Jackson Hole. Yep. There's a longer than usual spread. Maybe there's going to be the sense that they'll want to get one in. But I really do want to dial back to the idea that if the average investor is making a list of here's what to worry about most about the markets or the economy at this moment, the Fed funds rate of 4 3/8 is not top of the list, right? So whether we got a quarter point below that or not, or the Fed was able to sort of start to say we're going to be here to lend support, and if things get bad, that's fine. But I don't think that you're going to have a tantrum because the Fed is not right at the verge of its next rate cut.
Right. Long bond back below 4.8 today. Bessent did say yesterday, one day the market may discipline us, is how he put it.
Yes. Big bulge in expected Treasury issuance on the way. And he's very sensitive to that. Clearly, he came in as a kind of deficit hawk. We have this unsustainable, structural debt issue and obviously $1 trillion a year in interest.
Jay Powell said the same thing he always does. Come on.
Being on alert for something like that. It really hasn't happened just yet. You have the rest of the central banks. There were a lot of them seeing clearance to cut rates. And so maybe it's going to suppress global yields a little bit. So far, okay. The dollar has kind of firmed up around these levels here, right at the dollar index, right at 100.
Right. And a little risk appetite in Bitcoin, for example, today.
For sure.
Crypto knocking on the door of 100.
Yes. And it's now back to essentially moving with stocks. Whatever for function or purpose it was going to supposedly solve or serve before, like along with gold, it's not really doing that. It is a risk appetite tell.
Interesting comments from Ken Griffin. Last 24 hours, he's been out of Milken. Talked about this morning, he's talking to Politico. Tariffs open the doors to crony capitalism as the government picks winners and losers. In his words, it's terrifying to watch this play out over the course of weeks. Says whether it's a flat screen TV or a new laptop, your dollar's not going to go as far. This starts unfolding in the next couple of weeks. And then here's what he told Sarah Eisen about the impact of tariffs.
The question will be, if we implement tariffs at the rates that have been proposed, that will certainly be an inflationary shock. Will that shock persist as we undergo deglobalization and move supply chains back towards the United States? That's the real question that none of us know the answer to.
David, was that view widely held out in LA this week?
I think it is. Yeah, I think it's fair to say that is a decent reflection, at least, of any number of the conversations that I certainly had with various people who are both allocating capital in the financial markets or running companies as well. And obviously, that is one of the benefits of Milken itself, is just the convening power that Michael Milken has in terms of bringing people from all industries and all sorts of different areas together. But again, I would come back to, I think there's still some optimism that things are going to not be resolved, so to speak, but to the extent that Mike has been describing as well, put on at least a path towards some sort of resolution that you can see down the road, which will give enough confidence that we'll avoid the worst. But everybody sort of on that same line. You don't know the timeline, I guess, is the problem. And the fact is, we only know we're getting closer and closer to actually starting to feel the impacts.
We don't have enough of the variables to actually put it to the equation.
No.
Right. So that's why nobody's pretending we can quantify this and put it where it belongs. It is fascinating, though. You mentioned most people share what Griffin is saying. Griffin is being actually very forthright about our.
Yeah, I also want to just jump in and say, look, if this trade deal that we get at 7 a.m. or whatever, if we actually get a trade deal that says, hey, we're going to no tariffs at all, like we're going 0-0. That's great. That's probably the most bullish thing you could get ever, because it means we end up with lower tariffs than ever before. I don't know how likely that is, though. But this will be somewhat of a signal for how much Donald Trump is actually willing to let tariffs go, and so that's why the 7 o'clock meeting is kind of huge.
Carl. Keir Starmer, the British Prime Minister, is not here in Washington today, but I am told that Keir Starmer will be participating in this Oval Office announcement in some way. I'm told he'll be speaking via remote, whether that's on speakerphone or piped in on a screen. We'll just have to wait and see. So an element of some showmanship here at the White House. The president teasing this announcement last night without saying which country the agreement was with. Then this morning confirming. Here's the president's post on social media this morning at about 6 a.m. He said, the agreement with the United Kingdom is a full and comprehensive one that will cement the relationship between the United States and the United Kingdom for many years to come. Because of our longtime history and allegiance together, it is a great honor to have the United Kingdom as our first announcement. Many other deals which are in serious stages of negotiation to follow. But here's the statement from a 10 Downing Street spokesperson, which is maybe a little bit less effusive than what the president had to say. The 10 Downing Street saying the prime minister will always act in Britain's national interest for workers, for business, for families. The United States is an indispensable ally for both our economic and national security. Talks on a deal between our countries have been continuing at pace, and the prime minister will update later today. So the question, guys, here is, what is this agreement exactly? Is it an agreement to continue to talk, to continue to work toward an agreement, or is there some reciprocal lowering of tariff barriers, trade barriers, taxes, and the like? And I think the big question for the markets is going to be, what about those tariffs that are in place, the 25% aluminum and steel tariffs, and also the 10% baseline tariffs? Is the president prepared to announce at 10 o'clock East Coast time that those tariffs are going away, or the 10% baseline tariffs staying in place? I think that's going to be important for markets, because this deal is the first one out of the gate and will set maybe a precedent for what we see with other countries. So watch that 10% baseline number today.
As you know far better than I am, and I mean, actually negotiating a true agreement is a technical undertaking that can take a long period of time. So I guess we all come back to what headlines will be part of this, and or at least as they move towards an actual agreement, which again could conceivably take months, if not longer, to fully negotiate and sign. I mean, is there a template for saying, all right, we're going to withhold on this, this, and this while we negotiate?
Yeah, I mean, I think you can look at the president's pause on his Liberation Day tariffs as sort of a template for this, right? He announced something and then pressed pause in order to negotiate. Could the president pause on those additional tariffs? That's one possibility here, David. But you're right; these things take a long time, and the British government has wanted a trade negotiation bilaterally with the United States since the days of Brexit, right? So that's been years and years in the works. They tried to get a deal done with President Trump in the first term. That never happened. And so,
well, hey, this is going to be very interesting because, one thing to remember is Donald Trump always takes this sort of more showy route when he kind of announces and hypes up deals. It's like, oh, we're going to have this huge announcement. It's going to be the biggest announcement ever. And then it's like an update on Medicaid. And people are like, bro, we were expecting a little bit more of an announcement. Then it's, oh, we're going to have a full and comprehensive deal on talks, on trade deals with the United Kingdom, with which we have a trade surplus with, which is kind of ironic. That our first trading partner that makes a deal with us actually has a trade surplus with us, rather than us being, the deficit country. In which case, I think optimism could be premature, but the market still prices in a lot of it. Look at the Qs today, and you could see how much optimism is being priced in. Okay, yesterday when we closed, post-market, we were not only flat, but there was a moment where we actually dropped about a full point there on the Qs. And then when we got the announcement of the trade deal, some trade announcement coming, you could see the enthusiasm right here. That really took you between that 488 to 489 range, 490 even on the Qs. Obviously, the lines that we're playing today are on screen here. You've got 494 and 479. I guess, TBD. 45 minutes to go, and it's going to be entertaining. The market will be open in 15 minutes, and then we'll be waiting for that press conference over in the White House. Yesterday, by the way, I sent out an alpha report to course members, and it was pretty awesome. If you haven't gotten those alpha reports yet, make sure you check out the Meet Kevin membership. And if you want to try it for 30 days and see if it works out for you, no harm, no foul. You could always cancel after your first 30 days. But yesterday I wrote, Tempest, this one could get violent. Had good earnings. I'd watch for them to move at open and potentially go as much as 8 to 12%. They were literally negative at the open. They were like 1% to negative 5% at open. And then they rallied all the way up to 8. I think it was like 12.7% or something like that. So that was great. AMD, I thought was a fade. I thought Disney was going to trade sideways, and it did. And Open Door was another one to look at yesterday. So yesterday, the alpha report just really, really killed it. And I was really happy about that. So today, obviously, trading moves are going to be really dependent on what happens with Trump, which I already sent an alpha report to those of you in the Meet Kevin membership with some trade ideas. If this, then that. We'll see. So for now, though, I want to look at Coinbase, and Coinbase is finally breaking over 200. It's really remarkable to me how much pain Coinbase has been in, given how well Bitcoin has been performing. I mean, look at Bitcoin. It's over $99,000 again. This is really incredible because if you go back to Liberation Day, when we got liberated, we were at a close of $83,000. We actually went down as low as $74,000 post-Liberation Day and implementation of tariffs. And it's really just been straight up between these lines. Now, a big threshold that we're going to be looking at here, again, is that 102. And then, of course, our highs over here around that 108 line, which I don't actually have a line for, but it would just be the our highs. So wherever you want to put that. So 108 to 109. So we'll see. But I think this deal today could be partly responsible for some of the movement we get. How's Tesla doing? I heard that Tesla's getting rid of the range extender on the Cybertruck. I was a little bit disappointed to hear about that because I have a Cybertruck. I don't really care. Like, to me, I don't think I'll ever use a range extender, even if one existed, because I just don't like driving that much. It was something that was sort of a big selling feature of the Cybertruck when it was first announced, this idea that, you'd be able to add like 150 miles of range or whatever. So a little bit of a disappointment there to the Tesla community. I think they probably canned it just because they realized, like, hey, we just don't have that many CTs, and way fewer people are buying the CTs than we thought. And does it really make sense to continue to innovate something for a very small portion of the audience? And I think Tesla just made the decision no. Kind of sad, though, because it was something that Tesla kind of did promise. So a little bit of a bummer there. It seems like over-promise and under-deliver was a little bit of what you got with the CT, which was unfortunate. Another one that's moving today, ARM. They had their earnings, a little bit of a disappointing guide. Look at this perfect rejection on my line here, the 117.62 line. We got rejected within 22 cents of that. Really interesting. I think that line could actually be at play quite a bit today because, as you can see, we're recovering here in the pre-market from some of the damage. I think we were down as much as 9% at one point. And we'll probably bob around that today, especially as we see the trade deal enthusiasm grow. Again, that trade deal announcement in 40 minutes with our PM of the UK apparently planning to zoom in. Fernando here in the chat says Tesla jumped the shark with the Cybertruck. I don't know if it's that bad. Jose Samut says Google says it's 818 in California. Wow, you gotta try a new version of Google or something, man. That's crazy. It's 619 right now. So I don't know. I'm sorry, but whatever maybe that's why Google stock was down that much yesterday. I can't even tell time. So Dan M says Kevin is wrong on small caps doing bad in a tariff recession. I would actually invest in small businesses. Keep it in the U.S. Well, you have to break this down. I mean, how reliant is the small business on foreign imports? A small business is even less capable of building its own supply chain or negotiating its own American supply chain at profitable margins in the United States. Now, if you're talking about a small cap service business, that's different, which is not what the IWM is in aggregate. The IWM in aggregate is a bunch of zombie companies. So you really have to get granular with what you're saying. Again, if you want to invest in a service-based business in the U.S., well, what difference does it make? Tariffs don't matter because you're providing a labor-based service. So it depends what you're talking about. So you got to be careful about those glittering generalities. We'll have an Apple or a Google video out later along with my Palantir video. LOL says, how's your Nike swoosh theory holding up? Well, I actually have stopped talking about the Nike swoosh since I started getting a little bit bearish on 27 weeks unemployed, construction employment, the unemployment rate rising. And I said that I think the Nike swoosh is done. And I said that, many, many, many months ago, probably earlier than I should have, actually almost certainly earlier than I should have. But the Nike swoosh was great. If you look at the Nike swoosh, it actually played out. And I thought the Nike swoosh had a chance of ending in a euphoric rally, which it did. I just didn't think it was going to be that euphoric. But I mean, if you look at the Nike swoosh, this is perfect. We literally, from 22 to 24, created the Nike swoosh. And when we were over here in 22, and I was a bull going, we're about to have the greatest Nike swoosh recovery ever, people called me, oh, how could you be such a perma bull? You're never a bear. How could you be so bullish? It's so dumb. There's not going to be a Nike swoosh recovery. And then we had a Nike swoosh recovery, and it was glorious. Now I'm a little more bearish, obviously, because of the conditions in the economy, the labor market, the Trump tariffs. And so we'll see what direction we go here. Again, if we do a Ted Cruz, use the tariffs for free trade, best case scenario, stick a soft landing, no recession, good game. Everybody had a chance to buy the dip, move on. But I guess we'll see today, where Donald Trump's head is, because Donald Trump is giving us a heads up that this is his version of a full and comprehensive deal, which somewhat implies that this sort of concept that we're about to see might be what we might expect more of in the future, which hopefully what we get more of in the future is free trade. I'm a free trade buff, big fan of free trade, and think if we can have even more free trade, then that's wonderful. Then good job, Trump. He pulled it off the way he basically implied during the campaign. The problem is there's a lot of thought that Trump has been sort of convinced by people in his admin, which Ted Cruz talked about as well, that, tariffs should be here to stay because they're going to generate so much revenue. And I think a Howard Lutnick is really your, core person for that, sort of pushing for this idea that, we're going to have all this revenue that in the future we won't even need an income tax anymore, which is kind of crazy because, the math don't math for that. You'd have to have tariffs on every bit of importing goods of somewhere around 25 to 35% without a drop in international trade. Both of those seem very unlikely to really get some serious tax relief. So, I mean, is it possible? Sure. But are you going to crush trade? Of course. So it doesn't seem like the likely path. I think what's entirely possible is that, Doge doesn't cut as much as we think it does. We get rid of all these tariffs, which I think eventually, no matter what, whether it's under Trump or another president, all the tariffs will be gone. And we just end up even further in debt. But in the near term, that could actually be great for growth. So we'll see. We got about 5 minutes left to go here until the market opens. Let's see what's going on with the spread of the 10 and the 2. Let's take a peek here. So bonds. 210 spread at 47 now. That's great. So that's actually a good thing. We are now under shock level. Still, I would argue, not in a great place because we're so darn close to that shock level. But 47 on the 10-2 spread, that's pretty decent. I'll take that. That's really good. So I like to see that. And then we have, let's see, how's gold moving this morning? Gold's down about 70 basis points. Still at 33.68 though, not bad. Bitcoin obviously 99.4. We've got oil. Oil's up almost 2% on WTI. We're sitting at about $59 compared to $60 there. This sort of recessionary threshold where a lot of people think WTI under 60 is likely to be recessionary discounting. So it'll be very interesting. So Darren says, how about the earnings call on Sunday? You open it to questions from us. Yes and yes. So Darren's asking about the House Hack earnings call. We're going to do our first Q1 earnings call and sort of company roadmap on Sunday at 8 a.m. It's a live stream here. If you want the notification, you can click notify on it when you see the little video. If you want just an easier way to get notifications, make sure you get the Meet Kevin app, and then you can guarantee notifications because YouTube's not going to send them all to you, Apple and Android App Store. But yeah, it's exciting. It'll be our Q1 sort of earnings call, and we'll kind of talk about where we sit now and, how much money we've been able to make on an equity basis, where we sit on an income basis, where the balance sheet sits. It's pretty exciting. So that'll be, last year I promised that we'll do quarterly earnings calls for House Hack, and they're just sort of like, it's not a public company, right? So there's sort of like mock earnings calls, because it's again a private company. I don't think any private company actually does that, but I think it'll be kind of cool. So that's Sunday at 8 a.m. Thanks for asking about it. All right. So, Kevin, do you have any hopes of the 10-year yield going significantly lower this year? Well, that is entirely predicated on recession or not. That's why, like, my main stocks playlist on the YouTube channel is recession or not, here we come. Like, nobody exactly knows what's going to happen, but if we do have a recession, which I think we will know. We will know if we have a soft landing or recession, probably by back to school. So if by back to school, let's say we have no tariffs, we have tax cuts, then we could be back to a boom environment. We could be back to growth, and we could dodge a recession, which is great. Then it's back to bull mode, baby. So that's the potential. And I think we have that answer by August. it's also possible that we're still negotiating trade deals, layoffs skyrocket, we're in a recession, and if we're in a recession, Treasury yields are going to plummet because the Federal Reserve is going to have a hissy fit over unemployment. You know, like we talked about in the Fed video yesterday, which I encourage you to watch if you haven't seen it yet. They will have an absolute hissy fit, and they will tank rates so damn fast, which is great. Yeah, Brandon Keat is talking about how, well, we were in a recession during Biden. I know. This is old news. So technically, we had 2 quarters of negative GDP comparing to 2021, which is a boom year. But a recession, the definition isn't changed by the Biden admin, really. Technically, a recession is decided after the fact by the National Bureau of Economic Research. And there is no formal definition other than a slowdown in growth and a weakening of the labor market. So this is sort of like a qualitative assessment that needs to be made. Yes, traditionally, that's 2 quarters of negative GDP and rising unemployment. But we didn't have rising unemployment. We actually had falling unemployment. We had a really good job market in 2022. So I know people poop on Biden, and I pooped on Biden a lot, okay? I mean, I was like the king of pooping on Biden. I think I basically just poop on any existing politician because they drive me crazy. But we had a good labor market in 22. So anyway, let's get the bell here.
By the way, I know that Jensen Huang told the president, from what I understand, we're talking $40 billion in revenues that could, and profits. That's a lot of tax dollars that you could be losing out on. We're going to definitely start watching the tax dollars very soon. There's the opening bell on the CNBC real-time exchange. There's a big board. It's Aspen Insurance celebrating its IPO.
That's pretty green. So that's pretty green. Usually when it's this green, it's going to be like 50% red at the end of the day. Okay, this is what I tell, like, when we do our course member live streams and stuff, we talk about this pretty regularly. Usually when it's that green, you're going to get some more red, and then it's just a matter of finding where it's going to be. Someone here says, $5 donation. Honest thoughts on China going into recession. College friend is from Beijing. Went back recently, says it looks like 2008 America. Yeah, I mean, it's obviously we can't base it on, one person's anecdote. But I think that, China probably lies about their, 3 to 5% growth. It's probably like 2 to 3% lower. So if they're going to grow at 3%, they're probably growing at 0. So I discount the Chinese numbers. I do anticipate that they're growing faster than we are, but I definitely discount the Chinese numbers. So and they're going to get hurt from this trade war as well. The difference is the Communist Party doesn't give a flying F if there's pain. They care about sort of their principles, whereas in the United States, our politicians have to worry about the market, because if they don't, then people revolt. And then Trump doesn't get his tax plan passed, and he doesn't get congressional votes, and then he gets Congress trying to fight him. Then he loses in midterms. So the Chinese Communist Party actually has a really strong position to just like outweight Donald Trump. And unfortunately, that's going to be a bad thing for the ultimate resolution to the trade war. Because it's not real, like, who cares about the United Kingdom? It's going to come down to China, okay? It's like 2018. The stock market traded sideways to down in 2018 all year, in part because of the trade war just with China. Right now, Donald Trump has created a trade war with every single country in the world. Like the magnitude of this drama is way larger than anything we've seen before. So it looks like markets right now are sort of like pre-discounting Donald Trump's potential trade deal here a little bit. That's probably because, people don't believe that this is going to be a full and comprehensive deal, as Donald Trump says. It's sort of like, healthcare. Okay. I honestly thought like nobody really seemed to pick up on this that much. But during the campaign, Donald Trump was asked about his healthcare plan from his first term, which, Kayleigh McEnany and Donald Trump were always like on a weekly basis. The deal's done. here's the deal. And then, reporters are like, can we see it? No, you can't see it yet. And then, 4 years later, we find out that Donald Trump says, oh, well, our healthcare plan was just a concept of a deal or a concept of a plan. And I'm like, oh my gosh, this is like crazy. How could you say that? You're basically like saying that everything you said 4 years ago about the healthcare plan was bullshit. And it kind of was. So I think that's where, people, when Donald Trump says, oh, it's the greatest deal ever, people go, uh-huh. Yeah, all right. Proof is in the pudding, homie. So we'll see. I mean, it'll be, it's supposed to begin in 27 minutes here. So we shall see. And yeah, let's see what we got. Okay, so let's see here. Leighton, you're smoking crack, man. Leighton says, for years, China's been doing it. Actually, if you go back through my videos, dumbass, I've constantly been bagging on China, saying that I think their growth is bullcrap, and they've probably been in a recession in 22, 23, 24. Said that for 3 years straight. So I don't know where you've been. You probably haven't been here because like a true follower of this channel uses logic and reason. It doesn't say stuff like that. So I don't know. Maybe you're just like a disciple or whatever that's here for the first time. The door's over there. Like, you don't have to be there. It's not that hard. Not to be a weenie baby, but if you're gonna stick around here, you're gonna have to get that weenie off of you. Anyway, so what's moving today? We got Tesla rocketing at the open. Look at that, amazing job. I think, look, if we can get a real trade deal today, 295 is in play for Tesla, and my mindset is that Tesla probably has a top at about 318 to 320 in the near term. So near term top 318 to 320 for Tesla in the near term. If that is a potential sell call position. I don't really think this is a sell call position. Also, volatility is too low right now, in my opinion, to sell calls. This is a better environment for trailing stops than I think it is for sell calls. So that's something I keep in mind as well. Let's see what else is moving here. We've got Win 84. Nobody cares. Super Micro. I mean, this is just a giant trading sideways move here on the Fibbies. Rocket just wants interest rates to go down. So if interest rates go down, Rocket Mortgage is the play. Until then, it's trash. Apple still can't break $200. How's Google doing today? Google's trying to dead cat bounce. Not. It's already fading its dead cat here. That's crazy. I'll have my Google video coming out, but Google's an interesting one. We'll see what happens here with Google. How's Nvidia doing? They should be doing nice today. Not really. They're also fading. Yeah, look at that. Everything's kind of fading the pre-meeting run. Usually it's like retail that buys in the pre-market and the institutions get in there like, nah, man, we'll fade this. Institutions and hedge funds have been dumping stocks going into, this sort of like trade war and potential recession or whatever this is creating. But retail has been buying and buying and buying and buying and buying. It's crazy. So we'll see. Dan M in the chat says short everything. I personally am not the biggest fan of shorting. Like, my version of shorting is not owning, right? So like, I think when things are undesirable in the stock market or on certain valuations, I just rather not own it. But shorting is very difficult because, you look at the momentum that could go into stocks. They could just bankrupt you on a short. I don't think shorts are a good idea almost ever. You really have to nail the timing. You kind of have to have like insider information. And I mean, basically crime is legal again. So I guess you could get away with playing insider information trades, apparently, based on how much insider trading is going on. I mean, you could see it in the option flow on a daily freaking basis. But whatever. Who am I to complain? So Bitcoin loves this, by the way. Just keeps rocketing here. Did we end up getting to 100 yet here? No, look how close we got to 100. 99.9. That's crazy. So again, like I'm not here to short BT sizzles, I don't have any shorts on anything, but yeah, I will choose not to participate at certain valuations. So but I'm also a little biased right now because I think invested, like, this is me. I'm not telling this to you. This is not a guarantee for you, but my opinion is every dollar I throw into house hack is an easy double. And when I think valuations are high in the stock market, I think I have a scary shot at a double in a lot of stocks, like high risk. It could be a double or it could be minus 50%. And so if I think I have an easy shot at a double or a triple in house hack, well, that's easy, so I throw money into that. And I think it could be even more than that, right? I'm saying easy shot at double. That's my take. Again, that's not a guarantee or a pitch for anybody else. I just say that as a way for people to realize, like, okay, that's fine. Kevin has his little investment. He's got his bias. That's fine. But that doesn't mean I can't share my opinion and analysis on stuff, right? And I actually think it makes me less emotioned, right? If I'm not in, like, I don't care. Like, I give zero flying Fs if Google goes up 10% or down 10%. I really don't care. But what that lets me do is just have an objective analysis on what's going on. Same thing with the Qs. Whether the Qs are 600 or 400, it makes zero flying F of a difference to me. So I can objectively look at this. Like, I'm not like trying to defend a position, right? I don't care. So anyway, we'll see. We got this trade deal coming up in 21 minutes. Trump is usually 5 to 10 minutes late, so it's probably going to be 7:05, 7:10 when we actually get that. Dramatic is writing house hack IPO. My goal is 2028 to 2030. That's the goal. It's really going to depend on how quickly our innovation scale plans work out, and we're pretty excited about those. Because to us, like, worst case scenario, we just play the Invitation Homes game, which I think is, like I say, like, an easy play. But there's also a Carvana-esque aspect that we can do in real estate that hasn't been done before, and that's where serious multiples are. So that's where my range of optionality comes from when I'm like, oh, easy dub versus 10x, 20x, 100x, I don't know, whatever. And again, like, none of that is to try to encourage you to invest. I'm just telling you where my head is. So come to the earnings call on Sunday, and I'll tell you more about it. Okay, Tesla is 285, still pushing green here on the average candles. And yeah, actually, even on the non-averaged, AppLovin, great numbers, by the way. Google's dead cat balance is already leaking. Disney wants to keep moving. Actually impressive, because yesterday they were sideways all day. Whoa, Symbiotic. Finally a move on Symbiotic. So they must have reported this morning. Let me take a look at this one, because the volume on this one has been very, very low. And in a recession, Symbiotic's probably not a great play. So there's probably some recession discounting going on here. But absent a recession, Symbiotic's a great robotics and warehousing play. Some people actually say it could even be good in sort of an initial tariff drama, because it leads to more potentially automation and holdover warehouses. The micro feed says, I watched Kevin for like 6 years. Don't think anyone works harder. Ah, thank you. So, all right, let's see here. We've got, okay, Sim. All right, Sim sees Q3 total revenue, a midpoint of 530. That's actually a miss. So Q3 guide was a miss. 530 versus 560. That's a miss of, what is that, about 5%? Yeah, 5.4% miss. Then you have Q2 beat, though, on an adjusted EBITDA basis, 34.7 versus 27.7. Loss per share came in at 4 cents versus expected EPS of 2 cents. So, I don't know if this is just moving because there's very little volume, but the guide was a miss. So what am I missing here? I don't know how this pumped as much as it did here because the numbers don't seem great. But yeah, anyway. For house hack, do you cross-compare insurance companies, insurable regions prior to purchasing? I was trying to buy a home in Hawaii, but a lot of the companies are not willing to take policy risk. Well, yeah, I mean, of course. I mean, we were basically asking, you're donating $10 to ask me if I shop insurance. Dude, let me just give you an example of like what I do, okay? When I get a plumber that tells me, hey, it's going to cost $700 to do something, real example, by the way, my first reaction is, hold on, buddy. How many hours is this going to take you? Because I've done my share of plumbing, and I want to hear how many hours you say this is going to take. And if I get some bullshit 2-hour answer, I'm calling another plumber. Do the same thing with insurance. Of course, we shop around various different vendors. And usually what happens is when you get a good vendor, you keep using that same vendor. You keep giving them business. But every so often, you got a price check. You know, everybody should do this with your insurance policies. Every so often, you got to keep them honest, make sure you're still getting the best pricing. But insurance is, you know, it's expensive, especially in an area like Hawaii. You know, I actually thought of the funniest irony. I mean, it's sad, but it's also the funniest, in my opinion. I think it's a funny irony. I laughed when I said it. Okay, so listen to this irony, okay? And then we'll get back to stocks for a moment. So watch this irony. First of all, everybody says, I hate California real estate because of the politicians, okay? You've heard this one before, but there's a second part to this irony, okay? So the first part of the irony is everybody hates California politicians because they don't let you build houses easily, right? But that actually reduces the supply of houses, which increases your property value. Okay, first irony. Okay, second irony, houses burn down in California, which also reduces the inventory of homes in California, which also increases the value of existing homes in California. So you literally have a negative supply shock because politicians are morons in California, like Gavin Newsom, and you have fires that burn even more inventory, so you have even fewer homes, which basically both of those just drive prices up. Like, California is politically stupid, which enables increasing housing prices, and the fires burn more of our inventory, which also increases inventory, or which also increases home prices for what's left, for the leftover. It's kind of this interesting double irony where if you look at it, it's like, you know, people are like, oh, I don't want to buy homes in California because of the fire risk or because of politicians. And I'm like, well, I want to buy homes in California because of the politicians and the fires. It's the craziest irony. It's kind of like if you really think about it, you're like, oh, damn, he's kind of right. Maybe California is a good place to buy real estate. It's kind of funny. Tariff inflation on CPI will get drowned out by lower energy prices. Well, I mean, a rollover in owner's equivalent rent and minimal changes in food. Well, Jerry Diehard, thanks for your $5, but, you know, it doesn't work that way because, you know, you have to look at what the Fed cares about. It's not just headline inflation, which headline inflation accounts for energy prices and food along with all other forms of inflation. But you have to look at core, and then you look at core goods, core services, and core non-housing services. And so when you look at the three core components, you want everything to be going down. The problem is we're expecting goods inflation to start rising again. We don't know what's going to happen with service-based inflation yet. And we don't know if the housing, rental inflation fall is over yet. Who knows? But yeah, I mean, it's TBD. And obviously, I think Powell made a really good point yesterday when he said, hey, a lot of this is going to come down to what happens with how long are these tariffs going to last? And today is actually a really big day because it's going to give us our first example of what a trade deal is going to look like, right? So Chaz says, you're charging too much to be my real estate agent. You're not talking to me because I'm nobody's real estate agent, so you're definitely not talking to me. So let's see here. Oh, Chaz is offended because of the plumbing example. Oh, Chaz, if you can't hold people, keep people honest by asking them why they're charging what they're charging, then you don't know business. Go back to business 101, man. If you're going to roll over and take whatever invoice somebody gives you, you're not a business person. Bye, Felicia. Go back to I don't know, wherever you just roll over and pay whatever people tell you to pay. Go back to, I don't know, Biden world or something like that. Oh, okay. It's going to be $9 billion more for Ukraine. Okay. I'll go ahead and copy paste my signature on it. All right. And I'm not trying to make a political point about Ukraine here. I think, Russia is loony and, you got to understand what Ukraine is. It's a proxy war with Russia. It's us fighting Russia. We're at war with Russia. Okay. So Josh Struts, $5 to look at Dutch Bro's earnings. I'll look at I'll look at your bro for $5. Oh man, this is like the finance version of OnlyFans. Oh no. All right, Dutch Bros, spread your cheeks. Let's have a little exam here. Let's go look. All right, hold on. Dutch Bros. Let's see what Dutch Bros did. I actually like Dutch Bros. Both, I think their coffee is better than Starbucks. They're in the expansion mindset, just like Texas Roadhouse Grill is. Keep in mind, you want to look at same store comp sales to see if the business is actually growing versus just headline revenues, because they're just going to build more facilities, right? So keep that in mind. But yeah, I mean, if you go into, what's it called here? Dutchy Brosies. Let's see what we got. 805 in the chat. Oh, what's up? Doc Ordemeyer says, why is Kevin given straight up Republican talking points? Suck my wiener. Tell me what's a Republican talking point, and I'll give you my honest, unfiltered opinion. But I don't know what you're complaining about because you just gave a generic statement. These are the things when people give these generic statements, they're like, well, you're just doing this. Okay. Why don't you tell me exactly what you're offended by so we can address it? Usually the answer is, well, I guess I can't really. Okay, weenie baby. Matt Walker says, Kevin, you're literally agreeing with Ted Cruz. That's because Ted Cruz is right, and I'm willing to say it, you weenie baby. Ted Cruz is absolutely right that there are people in the White House who want to screw America by keeping these tariffs up forever, and that's wrong. And the best thing for the White House to do is get rid of tariffs. Now I got to go fulfill my OnlyFans obligation here. Okay? Somebody donated $5 for me to spread the cheeks of the bros. So we're going to spread the cheeks of the bros. So what do we got here? Damn, look at that. Company operated shops. That is an explosion in top line revenue. Again, I want to look at comp store sales, but honestly, 31%. Dang, Dutch Bros. That's nice. 31% top line. But what's comp store sales? Well, let's find out. Comp store sales, here we go. Same shop sales growth of 4.7. Yeah. It's okay. It's better than Starbucks. Starbucks had negative same-store sales in the United States for the first quarter of 2025. Positive transaction growth. So not only do they have more transactions, but they also have an increase in rev, which is great. That implies pricing power. So that's decent. Worst case scenario, you have more not worst case scenario, but like a scenario that could happen is you have more revenue, but you have fewer transactions, which is like you're basically trying to milk people. That's not what's happening here. So that's decent. Okay. All right. Same store sales. What is this respectively here? 4.7 and 1.3%. Oh, that's transactions were up 1.3. Okay. All right. I'll take it. Okay. That's not bad. Cost of sales. What's our margin here? Wow. We had net income of 13 cents. In the quarter, that's a little on the low side for a restaurant business here. I mean, look, I don't like restaurant and food service businesses in general. I don't invest in any. I don't plan to invest any. I think, more often than not, you're kind of getting ripped off by just a very low profit business. Like if you want to look at like if we were going to do like the OnlyFans reveal of a really like bad stock that I think is going to go bankrupt this cycle, look at where I used to work as a busboy. Red Robin Gourmet Burgers. Some of the worst numbers, losing money, high debt, bailout loans from JP Morgan, across the board trash. Like, unless they figure out how to sell their $18 hamburgers for a higher margin, they're screwed. And honestly, $18 for a hamburger, that's bullcrap, okay? When I worked at Red Robin, it was $7.99 for a regular burger, and it was $9.99 for a premium burger, okay? $7.99 to $9.99, that's a good burger, okay? From Red Robin with bottomless fries, that's a good deal. $18 with Biden bucks, that's bullcrap. I don't want to pay 18 Biden bucks for a hamburger. That's crazy. Okay, Dutch Bros. Let's look at Dutch Bros. And then we got Donnie T, my homie Donnie T. You know, the Republicans and the MAGAs, they love it when I call Donnie T. They love it. Nobody loves it more than the MAGAs. Okay, so what do we have here? Remember, folks, my goal is to piss off everybody, both Republicans and Democrats. I want no friends. Okay, so we have $61.74 share price. We're going to divide that by only 61 cents of earnings. Holy smokes, dude. Dutch Bros is trading for 101 times. That is an insane multiple. Oh, but they're expecting to grow at, over the next 4 years, 33 times. Dude, no! 101 PE divided by 33. Dude, it's selling for 3x on a peg basis? Hell no. I can't. Man, that is a dirty OnlyFans reveal right there. No! Overvalued. Now, the thing to keep in mind about Dutch Bros is there's a lot of momentum, okay? First of all, it's got bro in the name. So anybody who's under 30 is like, that's my stock. All right, so you've got the meme flow. It's also performed decently. You know, when you compare Dutch Bros stock performance to Starbucks, it's doing pretty damn well. So you can't really blame the momentum in it. But you know, from a value point of view, nah, I don't like it. DMAC just donated $10 for I Want No Friends is why I'm here. Let's go. But see, now because I had to put your $10 banner up, I have to rewrite my banner. Trump at 7. See, look how grateful I am. No, seriously, thank you. Okay, Trump at 7 a.m. California time. So he'll probably be 5 to 10 min late, JFYI, for announcement on trade. All right, there we go. Thanks for the $10. You had your banner moment. Boom, got rid of it. All right, so let's see here. Let's see. Okay. How about yeah, let's keep looking at some of these. Okay, there we go. That's good. What time do you go to bed normally? What's bed? All right, I only know coffee. Speaking of which, I need a refill. Have you seen this mug, by the way? Look at this mug, and I don't mean this mug. That's a good one too. I mean this one. Look at that. Look how beautiful that is. Isn't that nice? That's like somebody like clay crafted this. You know, like RuneScape crafter. I mean, that's nice. Little yellow handle too. Gorgeous mug. I love this freaking thing. I wish it would hold more coffee though. So usually I have like an extra large coffee every morning. We add a little bit of the powdered form in it too. And it's great. But this is a little on the smaller size, which, you know, it's not about size, okay? It's about performance here. But I wish it had a little bit more quantity. So, all right. So then we've got, yeah, the Qs are doing nothing right now. They're just moving sideways, which isn't a surprise. And Carvana is doing, it's kind of momentuming here a little bit, which also not a surprise because honestly, they're doing pretty damn well. You got to give it to them. When they burned their bondholders at $2, they had the greatest 100x comeback ever, and you got to give them credit for it, okay? Good job to them. Now, what's Bros doing? I mean, Bros, I know they've done very well stock-wise, but the valuation's kooky, but who cares? It's going up. So we were at $86 at one point? Oh, my gosh. That's insanity. So it looks like we're bouncing off on the retraces over here, the 57.96. Yeah, no, I look, I'll tell you what I'll pay for Dutch Bros, okay? So I would pay for Dutch Bros. I'll give them a 1.6 peg on a 35% growth basis. Very generous at, what was the EPS? EPS was 61 cents for the end of the year. 35 on growth, 1.6. I'll pay $34. Not a dime more than $34. Quick math, quick fundy, okay? We're not doing this DCF bull crap right now. We're just giving a quick little glampsy doodle here. And if I align, wow, dude, 34.16 based on, look at where it puts it on the Fibbies. Oh my lordy, right here. Yeah, so if you can get under that 34.53 line, boom. Technical analysis, check. Fundamental analysis, check. Nick J says, substance, please, less rambling. Oh, you poor soul came to the wrong place. And the irony of that is I probably just did more fundamental analysis in the last 5 minutes than you've done in the last 5 years. Oh, Kevin woke up and chose violence today. Oh, okay, let's see what Doomberg has. All right, let's go to the Doomers. So the Doomers, what do they have? Oh, they're on commercial. Wow, who cares about hydro? Scam. All right, so fine then. The Boomers are on commercial. The Doomers are on commercial. CNBC's on commercial. It's all a scam. Where's my trade deal? It's supposed to be in a minute, but we know Trump's going to be late. So, but, you know, CNBC is going to do the, watch, I guarantee it. They're going to do the breaking news banner, like the red banner that makes you pay attention. And then they're just going to go, so any minute now, Donald Trump is going to come out and talk to us. And it's like, okay, so you don't have the breaking news yet. You're just running the red banner because that's what you guys usually do. All right, whatever. You could always, you know, oh, are they going to do it? Oh, maybe. Oh, but they have the Squawk Box intro. I don't know. They might still do it. We'll see. We'll see.
Thursday morning, welcome to Squawk on the Street. I'm Carl Quintanilla.
Where's Sarah? I don't want Courtney. I want Sarah. This is crap. Where is Sarah? Oh, okay. See, here's, what is this? This hour, President Trump expects to make trade on. Okay, fine, whatever. So, I've got multiple different feeds waiting and watching. We expect Donnie T to be late, but that's fine. It's fine. You know, he's got a lot of work to do. He's got a lot of concepts of plans to work on. It's fine. It's fine. So, the Qs, you know, they're getting a little enthused again. Okay, it looks like we hit our 486 temporary low. And now we're just on standby for L trade deal. I'm kind of hyped for this trade deal. I want to see the concept. You know, I'm excited about it. So, oh, here it is. Oh, see?
Wholesale inventories and sales. On the inventory,
oh, there's actually
final.
News.
On sales, it's a new number. On the final, we lose 0.1%. We go from 0.5% to up 0.4%.
Who cares?
But maybe there's something important real quickly I need to go over. If you look at the beginning of the year in inventories, we started out with a powerful up 0.8. That was the biggest build going back to the summer of 22. Why is that important?
Look, he's talking about wholesale inventories, okay? Let me give you the numbers straight, okay? Without all the Rick emotion. He's a little too emotional for me. Okay, survey says 0.5. We got 0.4. Okay, wholesale inventories month over month, March final, a little lower than expected. Not a surprise. Tariff pull forward, big whoopee doody. Why are we still talking about March numbers? I don't know. But then you also have trade sales that came in at 0.6, a little weaker than the 0.9 that we expected. And we got a revision down from 2.4 to 2.0. Okay, who cares? This is March data. We're looking in the, you know, Cybertruck rear view mirror, which basically does you zero good because you can't look out the back anyway. So you're kind of looking at a big hootie of nothing. I don't even know why we're talking about it. So what we're waiting for right now is Donnie. Where's Donnie? Well, we got AI hearing, don't care. And then we got trade talks. I do care. And I'm just waiting. So any day now, Donnie T will be here. probably, as we put in the banner, be 5 to 10 minutes late. What does Megan have to say? She usually knows White House stuff.
What he says will be many such announcements. And we do know that this one will be with the United Kingdom. But a couple of key things to watch on this announcement specifically. The first is going to be whether that 10% baseline tariff remains in place with the UK. If you'll remember, the UK didn't get a higher reciprocal rate. They only got the 10% rate, tariff rate. And we've heard both publicly and privately from administration and White House officials that they do not expect to lower that 10% baseline tariff for any country at all. So it will be very key here to see if there's any flexibility on that number. If they leave it in place, we are mostly ending this roughly in the same place where we were with the UK before the announcement. The other thing, of course, is which key sectors then might be included. We are thinking there could be something on autos, on steel and aluminum, those sectors that are currently higher than 10% tariffs at 25% at this point. On the UK side, there could be something around digital services taxes. So key to see what exactly is going to be included in this framework. And then the final point here, this is almost a matter of semantics, but it does matter whether they're calling this a comprehensive agreement or an update on talks. And we've gotten mixed messages so far this morning on that. The president, of course, saying that this is a, quote, full and comprehensive deal. But in the UK, a 10 Downing Street spokesperson for the prime minister said the prime minister will always be sticking up for national interests, and also said that the talks on a deal between our countries have been continuing at pace, and that the prime minister will update later today. So very key distinction there, whether this is going to be a deal itself, talks on a deal. One thing I will say, the final upshot here, guys, is that it does matter. This is a significant step, showing that the president is looking to calm the waters, signing agreements, even in principle, with some top trading partners. But this is going to be a far cry from the comprehensive US-UK free trade agreement that the two countries have been negotiating for the past 5 years. We're just not there yet. We'll have to see exactly where we are in a few minutes. Guys.
Megan, I am just wondering, I mean, how closely will all of our other trading partners be looking at this? Will every deal sort of have to take its own shape and size? We know this; they're not a significant trading partner for us, but perhaps sort of significant that they are getting a deal of some kind.
Yes, I do think it's significant that there's a deal of some kind, especially after we heard the president earlier this week kind of downplay the importance of deals at all. At least we'll get some sort of a framework at this point. Every country will certainly have to follow their own set of issues and their own timeline and that sort of thing. But because they want to move so quickly, we also know from the administration that they have sort of a baseline framework that they want every country to try to agree to. So it's going to be key things like the 10% baseline tariff or any tariffs being lowered. How much flexibility is the U.S. showing here versus how much is the other country giving up here? That's going to be key. Every country in the world is watching for those specifics.
Yeah, Megan, I know it's a matter of some speculation, but do you have any sense in terms of what else might be next? It's funny, the UK certainly figured in some of the conversation, but we heard India's name a lot, Japan, South Korea. Is it fair to expect that similar kinds of meetings / announcements might be forthcoming with those countries?
Absolutely. We've heard, I was also surprised to hear the UK come first. Maybe it's because it was easier, especially if this 10% baseline tariff remains. There's no higher reciprocal rate to try to negotiate away. But we had been hearing much more often about Southeast Asia in particular. India, Japan, South Korea are the names that I've been hearing most often. Israel is also on that list. These are countries that we know have been pretty forthcoming, saying they're willing to lower tariffs. That's especially what the U.S. has been looking for. So we know that the administration wants to move very quickly here. And I would expect in the coming days or weeks to get more of these. I would also say, though, that Scott Bessent, the Treasury Secretary, said earlier this week, he was asked about progress on trade deals. He said he expects 80 to 90% to be done by the end of the year. So it's still a pretty short timeline, but it doesn't mean that everything is going to be finished, for example, within the 90-day window when the pause expires in early July.
Yeah, we've stopped holding.
All right. This is a big moment because it's going to show us Donald Trump's hand, right? This will be, you get to see Donald Trump's tiny hands, and we'll get to see what kind of cards are in the tiny hands. So, I'm curious too. It's gonna be something that I think will be very exciting. We'll see. There's also right now leaked footage of Trump's tiny hands. That's crazy. Look at this. Oh man, that's crazy. So I guess we'll see, and we'll see who really holds the cards Is it Zelensky? I don't know.
Versus when we thought they might be the first in line.
Megan, thank you. Of course, I have a feeling we'll be coming back to you in short order, Megan Casella in D.C. Let's get to Emily Wilkins as well in D.C. She has more on what to expect out of the AI hearing.
I don't care. I want to look at my sticks right now. So we're still waiting for, obviously, Donnie T. No surprise. The queues are actually selling down the longer it seems to take for this meeting to start, although there was enthusiasm going into it. The big deal here is Donnie actually going to be willing to get rid of those 10% reciprocals? Remember with Japan, for example, we have so many different types of tariffs, and we want to see for broadly all countries across the world, what kind or what level of tariffs do we think we're actually going to get rid of? So I personally like referring to this chart right here where we can see we've got steel and aluminum tariffs, we've got automobile tariffs, we've got reciprocal tariffs, we have surcharge tariffs. And so which items are actually going to be addressed? Are we just now going to announce a steel, aluminum, and auto part tariff, just like what we have on Japan? Or are we going to announce that we're still, we still have talks going on? Or, are we going to have some sort of 0-0 trade deal? Who knows? But I mean, that's going to make or break the back of the market today. So we'll see. I mean, so far it's we're 9 minutes past 7, and I still don't see Donnie. But it's all right. Things take time, I guess. So we'll just have a little bit of patience. All right. So what else is going on? CrowdStrike. CrowdStrike had a little bit of a oopsie doopsie after some layoff announcements yesterday, but it looks like you're already kind of crawling back. Not bad. Z-Pack. Love this new Kevin. Keep it up. Ignore the haters. Do what you've done the last 6 years. I've been watching you. Oh, thank you. You're worth every penny for your videos, courses, and knowledge. I'm going to go rent out Ty Lopez's garage. Come get some knowledge. I don't really like Ty Lopez. But anyway, so thank you. So what else? I mean, hurry up and wait as typical. But, that's how real estate works, too. We always joke. Real estate's kind of the business of hurry up and wait. All right. So IWMs. Ooh, under a little purple line over here. NVIDIA gave up basically all of its gains today, by the way. How's Google doing? Still dead cat bouncing a little bit. Actually coming back a little bit to life over here. Hey, Kevin, can you please pitch House Hack to us? If you want to diversify from the craziness of the stock market, get a 5% yield upside and downside protection with 100% of the upside going to you. Go check out househack.com, now open to non-accredited investors. Oh, thanks for reminding me. All right, NVIDIA just went, it's about to lose the lead. And Qs are only about 62 bips right now. I mean, from here, you could kind of go anywhere because this isn't really like heavily extended. This morning, we were pretty extended. So your kind of only direction was down as people priced in full hope. Now, with 65 bips, kind of move either way you want. DraftKings, $34 on DraftKings. One that's starting to bounce again, folks, Trade Desk. Look at this. Low on the fibbies over here. Okay, you heard it from me, Kevin. We've been talking about this one for about a week and a half now. It seems to be confirming a bottom here with about 10 days in a row of up after dropping like 55%, which was pretty crazy. We could do an OnlyFans like reveal on Trade Desk. Let's do it while we wait here. Trade Desk, investor relations. We always like to get naked with these financials, so let's do it. Let's see. Financials, SEC filings. Come on, baby. Give me a quarterly. Okay, fine. Give me an annual. Oh, an annual. Here we go. Let's go. Okay. So, Trade Desk. Let's see how we're looking over here. I know there's a lot of drama about Netflix. Netflix actually forecast the drama. Talked about that in the course lives as well when we reviewed a Netflix earnings call like 3 earnings ago. We're like, oh, this is bad for Trade Desk. And it really forecast the pain that came to Trade Desk. But take a look at this. So while we're waiting for Trumpy Doodles, you actually have a nice increase in revenue over here. Keith PV House, $5. Sometimes I ignore Kevin and follow my emotions. I've lost money every time. Oh, well, Keith, thank you for the $5, and I appreciate you being nice here. So what do we got here? Revenue 2444 divided by 1946, 25.5% growth. I mean, this is fantastic growth. They doubled their income from operations. That looks pretty damn good too. What about their valuation? I mean, so far, all of this looks fantastic while we wait for Donnie T here. I mean, you've doubled EPS. So you're trading for what, $57? And this is, that's the year-ended EPS. So where do we sit in the way of an annual forecast for 2025? Well, let's find out. TTD is the ticker, financial analysis, because those numbers look fantastic. The expectation is $1.57, so call it $56 divided by $1.57 of earnings. The stock is trading for 35.7 times, and our expected growth rate at Trade Desk is 24.47, 18, 29.62, 20.87 divided by 4. Expected growth rate of 23%, 36 divided by 23.6. Trading for a 1.52 for a service software business. Cheap. That sucker's trading cheap right now. You know, the problem that you have is this overarching view that sure, it's trading cheap, but is there a risk that other advertising platforms like what Netflix is doing are going to take over the connected TV advertising revenue by in-housing platforms rather than using the Trade Desk platform? That's one of the reasons Netflix has been skyrocketing so much, and one of the reasons why Trade Desk has been getting hit so much. So it's got a fundamentally low value. It's got low momentum, and it's creating a technical bottom. It's an interesting place for a trade, maybe a long-term entry if you think it's overblown. You know, some of the fundamental drama about, people making their own platforms. You know, Trade Desk doesn't work for Netflix anyway. It's more of like a Hulu provider and other connected TV provider. But Roku has, I think they're building their own in-house as well. I'm not sure about that. Fact check me on that, or look it up yourself. But it's an interesting position. You know, again, it's very low on the charts. It's fundamentally double DPS. It's got a low PEG ratio. Like, it seems like a little more downside has been priced in than you really need to price in on this one. So it seems decently positioned for some upside. Obviously, you know, we're not assuming recession risks here, but or just the longer term death. But I mean, when you have a candle that's like this, this is like the 1 month giant. I mean, man, it's like a 3 month downtrend. But it implies at least some dead catting here, eh? So can you do DraftKings? They report today. I mean, I usually don't love doing pre-earnings just because it's so speculative. I mean, I could look at what the expectations are. But one of the problems that you have with DraftKings, and this is a fundamental problem, is that you are, ever looked at BTC mining? Oh, yeah, all the time. Remember my interviews with HUD 8 all the time? But one of the problems you have with DraftKings is you have a lot more speculation betting arenas. Okay, that's a mouthful, but I want you to think about that. DraftKings is, your sports betting venue. But the problem with that is, your traditional sports betting venue was at a casino. Okay, then it came to DraftKings for online betting. But who's now doing it? Well, you have Kalshi, you've got Polymarket, you've got now Robinhood integrating it, which is obviously partnering with some of these other platforms. But the point is, you have so many more opportunities to make bets right now. It's actually harder to say that DraftKings has this super huge moat. And I think that's one of the problems that DraftKings runs into. I don't know, about these earnings, but just like in general, one of the longer term issues you have with DraftKings is just frankly a competition for gambling is almost becoming more ubiquitous. There's so many more options for gambling, and that's what one of your challenges is with DraftKings. So again, still waiting for Donnie T here. He's now 17 minutes late. This is very boring, But let me look at your DraftKings heads up here, since y'all are like OnlyFans stripping me down, making me give you opinions on stocks here. Obviously, none of it as personalized financial advice. I have to say that, otherwise Gavin Newsom's going to come after me again, just like he did during the election in 2021. But, you know, that's the way the cookie crumbles, I guess. So I need another cup of coffee. Damn. This is taking too long. All right, earnings expectations. We have an implied higher volatility today, implied move of 9.85%. Average move is 8.5%. Looking at EPS adjusted of 23.3 cents. GAAP earnings to be negative. Revenue of 1.46. They only beat 4 out of 8 times. They only beat 50% of the time, though. So, you know, not a guaranteed slam dunk there. So, how's their revenue been growing, by the way? Let me see. Just on a quarter-over-quarter basis. And then I'm going to go make a coffee while we wait for Donnie T here. On a quarter-over-quarter basis, their revenue has been growing. I mean, it's grown 24% from Q4 to Q1, so that's decent. You know, you still have growth at DraftKings. Year over year, you're growing at like 33%, which is pretty good. Valuation-wise, I mean, it doesn't seem like it's selling for a crazy premium here. It's trading for $35, projected 148 earnings, trading for 23 times earnings. Honestly, it's probably selling for a 1 peg. So valuation-wise, it's probably fine. The question is, do they have any moat? And it seems like right now, at least, you know, maybe the answer to that is no. So I don't know. That's just my take. So, all right, we're waiting the Trump announcement. I got to make a cup of coffee. I'm tired of this crap.
Way in which that changes in the next 5, 10.
Is that volume good for the Doomers? Let me know if that volume was okay.
Yeah, I think it's going to be challenging, Matt, to truly impact that, delta, as you point out. I would also add that onshoring manufacturing, as I'm sure you've heard from a number of pharmaceutical manufacturer CEOs, this is not a fast turn opportunity, right? These are things that are going to take years to truly pull off, despite, I think, removal of administrative hurdles to do so. We also know that an onshoring drug study after study are proving out, to include our own research, that it's going to result in higher prices as well. These aren't going to be inexpensive to onshore. And so what that means generally for us as consumers, and in particular GoodRx, is that employers, payers, we know they have a finite pool with which to support their benefit, particularly prescription benefits. What that points to is, again, those higher prices are going to create an ongoing opportunity for more cash prescriptions. And we view ourselves as a complement to insurance. The overall vision mission will continue to be that complement to insurance. I view us as sitting alongside insurance. It shouldn't be an or, it should really be an and. And whenever there's a cash price that can beat out your insured price to include when you're in your high deductible phase, that's what the experience should be at the point of sale, the counter, whether it's home delivery.
What is this? GoodRx. I don't care about GoodRx. GoodRx here. Wendy Barnes. That seems like, I don't like, who puts an E on that? Like, if I was going to type out Wendy Barnes, I wouldn't put an E at the end of that. Whatever. So, all right, Wendy, GoodRx pitcher. What else do we got here? So Qs, I guess, are just patiently waiting for Donnie T, who's now 21 minutes late. Man, I gotta hide this. Say, Trump so far, 20 min plus late. TBD tariff announcement any moment now. ... There we go. I'll slap that up on the screen. Boom, baby, boom. All right. Wendy. Okay. So waiting on news, waiting on Trump. It's pretty boring, but it is what it is. Google's bouncing right now, and so are the Qs. Oh, here comes the insider trading. So 66 bips on the Qs. NVIDIA just went up 0.25%. Google went up about 0.25%. Tesla's still at 1.5, although it was up a little bit more earlier. Well, this is a little boring. Okay, what else? So Dutch Bros is killing it right now. Look at that. Nice little run intraday. CNBC's on commercial. AppLovin really holding on to this 347 level. It just can't escape. Can't get away. Super microcomputers
lost the lead.
Down at what do we at here? 32 bucks. I mean, it's been wow. Tempest, second day in a row. I called this out yesterday in the alpha report for course members. Try it. Give it a 30-day trial. If you don't like it, just cancel your renewal, right? But give it a 30-day trial. See if you can make some money with the info in the alpha report. Because yesterday in the pre-market, I literally wrote in the alpha report, watch it at open, but I have a feeling this sucker could be up 8 to 12%. And it literally went to like -4, and then it closed at 12.7% up yesterday. So it was spot on. And it's up another 7% today. I mean, damn, that was a good call. Open Door was another one of the positive calls that we had. Even before earnings suggested that, you know, if I had to pick, Open Door was going to be going up because Q1 real estate was actually pretty decent. You know, there was a lot of demand for real estate in Q1, a lot of enthusiasm for real estate. It was all pre-tariffs, you know, stock markets at all-time highs. So it makes logical sense. You know, it makes sense. What do we got here?
All right, we're waiting for President Trump to, of course,
I knew they would do it. I knew it. It was just a matter of time for them to do it. They do that classic thing where they put up the breaking news banner and then they're like, yeah, breaking news, we're waiting. I'm like, dude, that's a scam. It's not breaking news that we are waiting. That's a scam. You're ripping me off. But I knew they were going to do it. And that's not Sarah Eisen. I want Sarah. Oh, man, you know, I don't know why they got to make it so hard. All right. Carvana. Oh, wow. Netflix is actually having a red day. That's crazy. This is like the first. Oh, people are finally fading Netflix. No way. Now, I mean, it's like a tiny little red candle here, but boy, this thing has just been a rocket ship. I mean, look at that. 1142. Really impressive. And again, a lot of hype in Netflix because there's this thesis that they're immune to tariffs. Okay, fine. But are we immune to recession risk? No. But that's okay. Maybe we won't have a recession because we're going to get a delicious trade deal any hour now. Well, it's supposed to be right now. We're 25 minutes late, but you know, what are you going to do? Tesla popping a little more. I don't know. I guess we could go spread the cheeks of another stock. What's another stock we should do? Somebody says Shopify going to finish green. Let's see what's going on with our homies at Shop. Shop. Oh yeah, look at that. Shop is trying to climb here. What's Palantir up to? Palantir. Whoa, another 5% on Palantir. I really got to get to finishing my Palantir video off because I really have a bullish piece on Palantir. So stock will probably crash right after I post it though. Okay, let's go. This was Trade Desk. You know, they're based in Ventura, by the way. So Trade Desk, we've got, how do you have $2.6 billion of bills to pay? My Lord, that's a lot. Yeah, most of this is accounts receivable. Wow, they have a lot of bills to pay. That's crazy. Their balance sheet isn't actually as strong as I thought it was going to be at Trade Desk. It's interesting. Go look at Shopify. See how they're doing. Shopify, investor relations, stock info, financials, SEC filings, HIMS. That's a whole video in itself. That's you don't just do a quick look at HIMS because you got to look at hers. See what I did there? Okay, yeah. Anyway, all right. So revenues at put my calculator. Here it is. 2360 divided by 1861. 26.8% growth at Shopify. I mean, that's pretty good. That's really good. Gross profit didn't rise that much. 26.8% was our top line move, and our gross profit was 22. Now on Truth Social, Trump makes a major trade announcement. Watch it live. Oh, okay, well, now finally the White House has a freaking stream, I guess. Finally, it's taken forever. It's, although I don't even think it's live yet. Still waiting. Anyway, still waiting for that trade deal. Anyway, income from operations. Oh, more than a double here. So that's nice in the 3 months year over year. How do you still lose money? Net unrealized loss on equity investments. You lost $1 billion by YOLOing into stocks. And then you lost $1 billion. Oh my gosh. I mean, at least they have positive income from operations, but dude, that's not good. Cash flows, free cash flows positive, 363, which is decent. And the balance sheet, I mean, we've got money here. Liabilities, wow, they don't have a lot of debt. Shopify's balance sheet looks robust. That's a sexy balance sheet. I mean, they've got over $4 billion of free cash. That's hot. So good balance sheet. We've got some growth. I don't know why they're YOLOing on stocks. It's fine if you want to diversify a little bit, but to lose $1 billion because you YOLO'd a bunch on stocks and had to take write-downs, I don't know. Somebody's making the wrong decisions over there. But whatever. All right. I'm getting tired of this, waiting for Donnie here. Donnie, you're 30 minutes late. You know, we expected 5 to 10 minutes late. Now you're 30 minutes late. You know, at this point, it's kind of just getting rude. You know, is it that hard to set up the live stream? I like how in the Associated Press live stream, somebody in the comments says, "Eat the rich." Okay. And then somebody else goes, "Trump blowing lines." These are some interesting comments they have on some of these randos. That's crazy. That's very interesting. All right. So what else here? It's Trump's tariff. He's taking advantage of us. They had to change his diapers. Do you mean Biden's diapers? Treasury Department imposing sanctions to pressure firms importing Iranian oil. Also imposing sanctions on several companies, vessels, and captains for facilitating Iranian oil shipments. Treasury Department sanctions, more oil sanctions. Nice. That's just fresh breaking news there. You heard it here first. UK trying to get a refund on the deal. Sounds like it. No kidding. This is crazy. Brandon says, I need a discount code. Email staff@meetkevin.com. You know, the price is pretty good at meetkevin.com right now. I think we're going to raise the price again on the 15th of the month. So you got a few days here, whatever next Friday is. Oh, I think that's the 16th. But anyway, yeah, we're going to raise the prices again because people really like it. And, you know, we keep updating how we want to provide more value. So we're pretty excited about it. And then later this year, we're going to be doing course member meetups as well. Trump officials weigh fast-tracking deals with Gulf wealth funds. Okay, like Saudi Arabia. Yeah, because Jared Kushner is working for them. So, of course, you're going to, you know, help out the crony, bro. You got to help out your cronies, you know? That's the way it works. I mean, what other good is getting into the Trump White House other than getting rich? Oh, wait, that's just for the insiders. Damn it. Okay, so Palantir's on a run. Look at that. It seems like the longer this trade deal takes to talk about, the more Palantir goes up. So maybe this is like just a built-in good thing. So kind of crazy, huh? Everything college football says, yes, Jared Kushner, my guy. There you go. So yeah, BTC now what, 99.6? Yeah, 99.6. Look at that. Getting a little Bitcoin Palantir pump. You know, today's Rust Wipe Day. Who's gonna play Thursday Wipe? I don't know. I know I have to make like 17 videos today. So Symbiotic, faded a little bit of that move. Tempest though keeps running. That's pretty sexy. I wonder why Rocket Mortgage is moving. Rocket Mortgage only moves when yields come down. Hey, we're about to hit 100K just waiting for Trump. You know, maybe that's the thing is like, we'll just like, there is no trade deal. We're just going to sit here and wait. You know, it's getting a little boring, honestly. I have to say, this is kind of crazy. From Punchbowl, House Energy and Commerce Committee will hold a high-stakes reconciliation markup on Tuesday at 2 p.m. The panel is at the center of a fight between Republican, moderates, and conservatives over Medicaid cuts. Ooh, Medicaid cuts. Yikes. I can't believe they're trying to go for it. Okay, so come on, Donnie. Okay. What else? So let's see here. Coinbase to acquire D-Ribbit. Today we announced that Coinbase has entered an agreement to acquire D-Ribbit, the world's leading crypto options exchange. Strategic advantage. The acquisition will significantly advance our institutional derivatives by bringing together D-Ribbit's market-leading options platform with Coinbase's robust futures and spot capabilities. Ooh, maybe that's why. No, because that was announced like 30-ish, 40 minutes ago. Bitcoin's just running right now. I mean, maybe that's all the insiders are coming in to buy right now. You know, maybe Trump got everybody in a room and they're like, hey, guys, this is going to be a big deal. You know, buy calls. And everybody's putting in their call buys right now. Because, you know, so far, they're just leaving us hanging here. But that's all right. You know, it's, you know, what did they say? Absence makes the heart grow fonder. Is that how that works? You know, you gotta leave them to miss them. I don't know. All right. This is boring. So let's do another analysis here. How about that? You know, everybody loves the good anal assists of a stock. All right, I'll pull something up here. In the meantime, let's listen to CNBC. What? Okay, go to Doomberg.
Some signs, but there also is a rather different ground to cover in the EU deal.
Stephanie, we were talking with Stephanie Guild from Robinhood a little bit earlier, and she was saying, and I think a lot of people in the market are hopeful for a world in which we get to zero tariffs on both sides, right?
Yeah,
but this is maybe a negotiating ploy to get us to at least lower tariffs than we currently live with. But we do hear the president often say he expects to bring in real revenue with tariffs, and maybe not just for 1 or 2 quarters. He wants to replace at least some income taxes with tariff revenue. So which is it? Does this White House want to raise revenue with tariffs to keep tariffs on foreign economies, or does this White House want to negotiate with that idea and get tariffs down to where we have freer trade globally?
You know, and you got to add a third one. They've also Scott Bessent has also talked about a third way of using tariffs, which is just to get other stuff that you might want. You know, remember it's been used as leverage with the Colombians, with the Mexicans and the Canadians when it comes to things like fentanyl. So there are many things that this one tool is supposed to accomplish. It usually gets you into trouble if you're a government. From what you know, there is a consistency, although he changes day to day. If the sort of drumbeat from the president ever since he was elected was that there is going to be an entry fee for trading with the US, and it doesn't feel like that's going to go away. We may, you know, I may be proved wrong in a few moments, but I think the idea that there's just going to be, you know, just as you have to pay a price for admission to golf clubs and, you know, resorts and things that Donald Trump tends to, you know, he thinks in those terms, Mar-a-Lago, the price has gone up.
A membership fee, yeah. Okay, let's piss everyone off in the world. Piss them all off.
The US is a great place to do business, and you should have to pay to play. So I don't think that's going anywhere, but it is obviously very important for manufacturers, whether you get into a kind of 10% zone or whether you're still in, for other countries, whether you're still talking about 30, 40, 50%. When it comes to China, we were talking about it this morning, you could potentially get back to the original Liberation Day tariffs for China in a deal, and that would be, you know, slashing the current tariff rate. But if you're a manufacturer of the goods that are going to the US, the difference between 140% tariffs and 50 is actually not as great as you think. It's still going to blow you out of the water.
Yeah, she's exactly right about that. That's actually what a lot of people have been talking about, is like this idea that, wait, there's a report coming in. Hold on. US to cut tariffs on UK-made cars to 10%? Who cares?
Those negotiations, given that that's the bigger trading partner we're talking about here.
Yeah, and I think it's very interesting that we have the U.S. Trade Representative Greer and Scott Bessent involved in those deals. We weren't in that negotiation in Switzerland. We weren't sure.
So those would be Lotus, Minis, McLarens, Jaguars, Land Rovers, Aston Martins. Nobody cares about any of those. And you're not even cutting it down to 0. You're cutting it to 10%.
To come down significantly.
That's a terrible deal.
Having them both in the room is an interesting thing to contemplate, but I don't think there's an expectation that we're going to have, anything like a framework agreement come out of these meetings. But we've at least got past the stage of like, who's going to pick up the phone? We seem to have got, we're now getting them both all in a room.
Stephanie, great to get some time with you. Really appreciate it. Stephanie Flanders is the head of Bloomberg Economics and Government. She is in Washington, D.C., standing from a backdrop of the Capitol that is not St. Paul's. I will say, when I worked in London, my backdrop was St. Paul's, and everybody thought I was in Washington all the time.
Well,
The domes are eerily similar if they're...
Wait, what is this? Trump, Starmer held a warm conversation on Wednesday night. Will speak again this morning. I know. We're literally sitting here waiting for Donald Trump's 7 a.m. conference, and it ain't happening yet. This is crazy.
Relationship. We know that President Trump really appreciates the royalty of the United Kingdom. He's going to meet with King Charles. He went and met with Queen Elizabeth. So we'll see how much of a blueprint this proves.
Is he going to react to the EU? In some ways, the UK news is being dwarfed by the EU's retaliation. These are much bigger dollars that we're talking about, Matt.
Yeah, and it's a problem for American manufacturers as much as we want to believe it isn't. For Harley-Davidson, it really hurts to have these kind of tariffs. We'll continue to talk about this, and we're going to get you to the White House as well. I want to get a quick check on markets before we do that.
You ain't going to get us to the White House because there's nothing going on at the White House. There's probably like a fist fight between Lutnick and, or should I say Slutnik and Bessent. But yeah, this is, dude, if that's the trade announcement, that's ass. Like, that's absolutely horrible if that's what the announcement is. It's just a rumor right now. I mean, we only saw the little banner there on the Doomberg, but that's a terrible thing. If they're like, we have a huge comprehensive deal. We are lowering tariffs on UK-made cars to only 10%. That's down from 25%. And for those of you who math, that is a 60% reduction in the tariffs. That's right. We have reduced tariffs on UK-made cars by 60%. No other president has ever done that before. No other president has ever reduced tariffs by 60% before. It's like, okay, that is so dumb if that's what this announcement is. We don't know. Who knows? Still waiting for the 7 a.m. presser, which is now 41 minutes late. But that would be crazy. So I'm going to see if I can find anything else out about that. But meanwhile, the Qs are holding on to 66 bips. Nvidia's down 40. Tesla just gained 1%. It's trying to rally a little bit here. I don't know if it's because, do people think like, oh, tariffs on UK made cars going down to only 10% is somehow good for Tesla? I don't know. Everything's good for Tesla. So let me see if I could get any other insight onto this. Because so far, yeah, auto quotas still leave UK car makers facing 10% tariffs. More details of trade agreement between US and UK are seeping out. Okay, we're getting more deets here. Hold on a sec. So the Telegraph is reporting that UK automakers will get a temporary 12-month quota of 100,000 cars that will only be tariffed at the low rate of 10%. Not 25%. Oh, it's like so dumb. The reporters are literally writing, that's okay, but still leaves automakers worse off than they were before last month. Okay. If that's the trade deal, buy puts. Because that's like so dumb if that's the trade deal. So, but basically, I'm going to write that down. And you could watch me if you want, because, it's like OnlyFans for finance. Okay. You get to watch me. All right, here we go. You ready for this? The Telegraph reporting via Bloomberg that there will be a 12-month 100K quota exemption for UK-made cars, reducing tariffs to just 10%. Oh my, Donnie. Thank you so much for reducing tariffs 60% from 25% down to 10% for those UK cars that previously had way lower tariffs. Okay. Probably hits minis. Yeah, because minis are, I guess, now made in the UK as well. Minis and Jaguars more per Bloomberg than Bentleys or McLarens, higher. So in other words, lower priced vehicles likely to suffer more. But what this does is it basically shows that if this is all they're announcing, right? If this is all they're announcing, we're basically saying Trump is not willing to give up on tariffs. He'll give tiny exemptions where he sees it fit. I don't know. That's kooky dookie to me. But they've also made us wait 45 minutes. And I don't know. That seems wild to me. Okay. So let's see here. Let me see if I can see the Telegraph. So let's see here. Okay. Let's go with Telegraph. Let's see if I can get some details here. Exclusive, Trump to cut tariffs on Range Rovers in deal with Star. This is so dumb. Is that really going to be what the trade deal is? I mean, if it is, that's wild. Let's see what we have. Oh, Lord. To continue. Hold on, I got to log in. The Telegraph. Who has a subscription to the Telegraph? Anyway, I mean, we kind of got the gist of it anyway, as it was reported by others. But, ooh, Axon. That's a good one. Yeah, we can look at them in a moment. But first, we're going to do the Telegraph here. Axon has been on a tear for like 3 years, I feel like. They've just been killing it. So, what is CNBC saying?
If that's what's in store, how do investors adjust their portfolios for that outcome? Tune into our Market Navigator segment later on today to learn more about...
Lame. All right. Donald Trump will slash tariffs on Range Rovers and other UK-made cars to 10% as part of a trade deal that will also see tariffs on American beef cut to 0. You have got to be kidding me. Well, first of all, Meat Kevin is very happy about cutting UK beef tariffs to 0. I like my UK meat just like the next person. I don't even know what the hell UK meat is, but whatever. Okay. The Telegraph also reporting that beef from the UK will face 0. Oh, sorry. It's American beef. I rather also reporting that American beef, I know what American beef is, will face 0% tariffs going into the UK. Wow. This is a temporary arrangement. Good Lord. This is supposed to be Donald Trump's giant or like comprehensive plan. Temporary arrangement ahead of striking what Britain and the U.S. hope will be a comprehensive trade deal in the coming months. What a lie! Comprehensive deal in coming months. So the whole thing was like fugazi. In return, the UK and the US will slash tariffs on beef imports and exports, although Britain will not allow hormone-treated beef into the UK. Okay, unless it's hormone-treated, then it's not allowed. This is so dumb. Steel tariffs will also be cut to zero. Oh, okay. Steel tariffs also to be cut to zero. Interesting. It's understood that British car makers will have a 100,000 car quota. Will get immediate relief on the sectoral tariffs. U.S. tariffs on British beef typically vary between 4 to 26%. British tariffs on American beef were up to 20%. What? This is really coming down to beef and cars. Yeah, on imports and exports. American beef and UK beef. Okay. This is crazy. It falls short of the full and comprehensive. While the trade deal will be a boost for Starmer, it falls short of the full and comprehensive arrangement that Trump declared on Thursday. The U.S. president, who will reveal the deal at a press conference in the Oval Office Thursday afternoon, oh, well, this is afternoon UK time probably, said the agreement will cement the relationship between the countries for many years to come. Are you kidding me? This is the dumbest thing ever.
Way you can find times when consumer sentiment falls, but spending remains relatively robust. That was true after 9/11. It's been true at other times. So he's going to wait till he sees the whites of the eyes of a real slowdown before acting in any way like there's something to worry about. Courtney. David?
All right, Steve, thank you. Steve Leisman. We mentioned this earlier. Don't miss it. Carl's got an interview next hour with Goldman's president and COO John Waldron. That's just a few minutes away. Stay with us.
Jeez.
And you saw, Land Rover for a time there even, go so far as to suspend shipments because they wanted to try and wait this out.
All right, Craig, great to have you on the ground with us. Craig Trudell there in London, in the UK, where we're getting these headlines from. Again, the Telegraph saying that the Trump administration has a deal with the US and the UK that will reduce tariffs.
Yeah, everybody's saying Trump is live. I don't see it. Where are you guys seeing it? Because AP doesn't show him live. Bloomberg doesn't show him live. CNBC doesn't show him live. Is it just the White House stream? And I can pull that.
But the deal is all now signed up and ratified. And we have access to a massive amount of very, very high quality rare earth. This morning, I'm thrilled to announce that we have reached a breakthrough trade deal with the United Kingdom. Incredible country. Today is a victory day for World War II. We won the war together exactly 80 years ago, so there could be no more perfect morning to reach this historic agreement with the UK is the first of a series of agreements on trade that my administration has been negotiating over the past 4 weeks. With this deal, the UK joins the United States in affirming that reciprocity and fairness is beautiful weather. So very talented team for their outstanding work and partnership. Today's agreement with the UK is the first in a series of agreements on trade that my administration has been negotiating over the past. With this deal, the UK joins the United States in affirming that 4 weeks. With this deal, the UK joins the United States in affirming that reciprocity and fairness is an essential and vital principle of international trade. The deal includes billions of dollars of increased market access for American exports, especially in agriculture, dramatically increasing access for American beef, ethanol, and virtually all of the products produced by our great farmers. And our Secretary, as you know, of Agriculture is here. Brooke, thank you very much for being here.
Thank you, sir.
You'll let the farmers know In addition, the UK will reduce or eliminate numerous non-tariff barriers that unfairly discriminated against American products. But this is now turning out, I think, really to be a great deal for both countries, because it'll be really great for the UK also. So they're opening up the country. Their country is a little closed, and we appreciate that. They'll also be fast tracking American goods through their customs process, so our exports go to a very, very quick form of approval, and there won't be any red tape. Things are going to move very quickly both ways. The final details are being written up in the coming weeks. We'll have it all very conclusive, but the actual deal is a very conclusive one. We think just about everything's been approved. So good for both countries. And we'll also receive new market access for American chemicals, machinery, and many other industrial products that weren't allowed. And they'll end up getting products that they'll be able to price, and if they like them better and we make great products, they'll be buying those products, but they were not available in the UK. Furthermore, in a historic step, the deal includes plans that will bring the United Kingdom into the economic security alignment with the United States. That's the first of its kind. So we have a big economic security blanket, and that's very important. And we feel very, very comfortable with that, because it's been a great ally, truly one of our great allies. I mean, a lot of people say our greatest ally. I don't want to insult people by saying that, but I can say it's certainly one of our greatest, and right at the top. And they're the first one we're talking about. And by the way, we have many meetings planned today and tomorrow, and every country wants to be making deals. And we have a meeting, as you know, Scott will be going over to Switzerland on Saturday, and that'll be very, very interesting. Let's find out, but I think they want to make a deal very badly too. Both countries have agreed that the economic security is national security, and will be working together as allies to ensure that we have a strong industrial base, appropriate export controls, and protections for key technologies and industries like steel. Steel is a big factor. Both countries will become stronger with steel and things necessary for military. You know, we used to build ships and other things literally at a level that nobody's ever seen, and we haven't. We've eased up, and I would say that the UK certainly eased up, but now we're going to be uneasing both, and we work together. Once again, I want to thank Prime Minister Starmer. He's been terrific for his partnership in this matter. The special relationship and external bond, it's really an external and an internal bond between our two countries, will soon be stronger than ever before. And we really do. We have a great relationship. I want to just say that the representatives of UK have been so professional. And it's been an honor doing business with all of them, and in particular, the Prime Minister. And I'd like to introduce him now to say a few words. Mr. Prime Minister, please take it away.
Zoom. Thank you, Mr. President, Donald. And this is a really fantastic, historic day in which we can announce this deal between our two great countries. And I think it's a real tribute to the history that we have of working so closely together. Can I pay tribute, Donald, to your negotiating team as well, particularly yes. Howard and Jameson, who've done an incredible job, a very professional job, and my team as well. Two negotiating teams have worked at pace now for a number of weeks to bring in this deal today. Really important deal. This is going to boost trade between and across our countries. It's going to not only protect jobs, but create jobs, opening market access. And as you say, Donald, the timing couldn't be more apt, because not only was it 80 years ago today that victory came for Europe after and at the end of the Second World War, but of course on that day, the UK and the US stood together as the closest of allies. And Donald, I think even down to the hour, because you may or may not know that it was about this time of day, exactly 80 years ago, that Winston Churchill announced victory in Europe. And that led to great celebrations across Europe, across America, but particularly in the United Kingdom. Literally people going out into the street, putting bunting up, going up to the palace. And so to be able to announce this great deal on the same day, 80 years forward, almost at the same hour. And as we were 80 years ago, with the UK and the US standing side by side, I think is incredibly important and makes this truly historic. That close relationship has endured over those 80 years. As you know, Donald, when it comes to defence and security and intelligence sharing, of course, there are no two countries that are closer than our two countries. And now we take this into new and important territory by adding trade and the economy to the closeness of our relationship. It is built, as you say, on those notions of fairness and reciprocal arrangements. We've always had a fair and balanced arrangement between our countries. This builds on that, hugely important for sectors like car manufacturing and for steel and aluminium and so many others. And yes, we can finish hammering out some of the details, but there's a fantastic platform here, including, of course, on the tech side, where I think I'm right in saying we're the only two Western countries with trillion-dollar sectors when it comes to tech. And in the end, it comes down to, as you say, Donald, economic security is national security. On national security, we've been absolutely the closest of allies for so many years, keeping the peace through that close alliance, that friendship. And now we add to that this deal on trade and the economy. And I want to thank you for your leadership on that, Donald, and for the way in which your team have negotiated this. And I'm so pleased that we've got this deal, we've finalised it, and we've built an incredible platform for the future. So thank you so much. Donald, I'm now going to go and do a press conference. I think you have your press in with you. But on the details, I think if you've got Howard, we can deal with that through one of my team.
That's great. Well, Mr. Prime Minister, thank you very much. It's an honor. We're going to have a continued, maybe a better relationship than ever before. You know,
this is dumb.
I don't know if the media knows, but the U.S. and UK have been working for years to try and make a deal.
And this is what you came up with?
Yeah. It did with this Prime Minister. So
I
want to just congratulate you.
Well, with this president, this Prime Minister, we've managed to achieve what many people have tried to achieve for many years.
Right.
And I'm really pleased. And it feels completely historic and on a special 80-year anniversary as well. So, Donald, thank you so much. It's really good to have got this deal over the line. Tribute to both teams, tribute to our countries, and tribute to your leadership.
Oh, my! It really is a great thing, and
a tribute to my balls.
And I'll see you soon. Maybe speak to you later. But thank you very much. And an incredible thing. I can't tell you that for so many years, even as I sat, everybody talked and talked and talked about a deal with. It just seemed like a natural deal, but it was not done. But now it was done with us, so I feel very proud to have been a part of it. Keir, thank you very much.
Thanks, Donald, and we'll speak again soon.
Very good. So long. Bye.
This is an embarrassment.
That's very nice. Why don't I do this? Why don't I have our Secretary of Commerce, Howard Lutnick, give a little description?
No! Not Lutnick!
The good side, the very nice side. We'll be speaking about it also, maybe, from so you get a pretty equal. I think it's a very, it's just been a deal that we thought very complicated. It became very simple. It's opening up the country that we really didn't have the kind of access to that I would have thought. I was surprised. I think it's why the deal never got done before. It was, they've been working on this deal for 25 years. And, we got it done, and we got it done. Really, it's going to be great for both countries. So, Howard, if you could go, and then somebody else, you may have, you'll pick whoever you want who'd like to do it. I have a feeling you're going to do it, right?
Hey, what the hell?
You guys go ahead, and then we'll take questions right after that. But I think you'll get a pretty good understanding of how big it is. It's a very large deal, very big deal. And Howard, go ahead.
So the UK is the 6th largest economy in the world and the 4th largest that we export to, right? So it's a huge market, a top 10 market. If you remember Liberation Day, they were at 10% because we have balanced trade with the UK, right? They say they have a surplus, but of course that counts gold bullion, which is So let's just call it balanced trade. So how do you open up a market in balanced trade? People think it's impossible. They've always thought it was impossible until President Trump came on the scene and changed the way things work. So here's what we've got. We've opened up new market access, ethanol, beef, machinery, all the agricultural products. They've agreed to open their markets, and that will add $5 billion of opportunity to American exporters. So the question is, why would they do that now? Because they've never done it before. And we still have our 10% tariff on, which will produce $6 billion of revenue for the United States. So the idea was, how do they keep their jobs, protect their economy, and do the best for their people while opening the market for us? And the ways they studied it, their team was exceptional, and they tried to figure out the markets that they're importing from other people and try to send them over to America. So why were they always favoring others and not us? And what they've done is they've found the ways to do that so that we have new access, right? But the UK workers are protected, and that was the balance. So we did a deal with them in automobiles, and if you're not building here, we charge you a 25% tariff. But the president, and by the way, I want to make this clear, while Jameson and I worked hard, this was the president's deal. And people think, oh, that's not the way it works. If you got to sit next to him, I have the best deal maker to my left. And if you don't think that we take advantage of him calling the prime minister and getting that deal done, you don't understand who's the president of the United States. So he's the closer. He gets deals done that we could never get done because he understands business. He understands deals. And that's why we're here today. So he agreed they could send 100,000 cars into America and only pay a 10% tariff. And that protects their car industry. And remember, we do 16 million cars a year. So this is only like 0.6%. But for the UK auto people, this is tens of thousands of jobs that the president agreed that he would protect for them. So he made that deal. Right? Then steel and aluminum, right? Their steel business has been destroyed like everybody else has been destroyed by people dumping steel into their markets. And British Steel had announced it was closing down. So the British government, as part of this deal, nationalized British Steel, and they're going to match the kinds of models we do. They'll put tariffs on, they'll put quotas on. They want to do it with America so they can be part of the resurgence of steel and aluminum in America. And that saves them, again, thousands and thousands of jobs. So if you go step by step, aero and commercial planes, they sell Rolls-Royce engines to Boeing. We've agreed to let Rolls-Royce engines and those kind of plane parts to come over tariff-free. And what you're going to hear today is there's going to be an announcement at the UK that they are buying $10 billion worth of Boeing planes later today, but I'm going to let the name of the airline announce it because that's theirs to do it. Part of this deal was always to do it together and to do it strong, and you can see the numbers on this board. Everything about this board works exceptionally well for the United States of America. It lays out the plan that you can work with us in autos, you can work with us with aero and commercial, you can work with us in pharmaceuticals, if you have a supply chain that is secure and protected in national security. So we feel really good about the deal. You've heard the prime minister. He feels really good about the deal, right? And we started at 10% and we ended at 10%. And the market for America is better. And this is a perfect example of why Donald Trump produced Liberation Day. People don't understand. He gets things done in a matter of time. This would have taken Jameson and I 3 years, maybe. And instead, we got it done in 45 days, certainly, because we work for Donald Trump.
45 days.
Jameson, my partner in all this, maybe Jameson, you'd like to talk a little, and then we'll turn it over to the UK.
Sure, happy to do that. Everyone has great remarks. I just have to echo the president and the prime minister when we talk about VE Day. This is something we've been waiting for decades, and there is no more appropriate date to do this. And when we step back and we look back a few weeks from now or months from now or years from now, we're going to look back at this day and better appreciate the significance, I think. And I'll just say as well, in terms of negotiating, I mean, the UK negotiators, we've got one right here, did an incredible job, right? This is why you win wars, right? When you act like this. And The ambassador, he knows more about trade than a lot of us here based on his background. And I would say on this deal, Mr. President, what we've shown is that it is time to change the way we do trade. People said we couldn't do a global tariff. We did a global tariff. They said no one would want to deal with us. People want a deal. They said no one give offers. You saw that stack of offers I showed you yesterday, all those countries. Said we wouldn't get deals, and here we are with the deal with the 6th largest economy. We've agreed to have fair and reciprocal trade, and we've done it in record time.
Thank you very much.
Yes, sir.
Great job.
Thanks.
Well, Mr. President, thank you very much indeed in hosting us this morning. And thank you very much indeed also for that very typical 11th hour intervention by you with your phone call to the president, demanding even more out of this deal than any of us expected. So thank you for that. The Prime Minister was delighted, obviously, to take that call late at night. But you took it to another level. And I think the point I would make is twofold. One is that if we're going to rebalance and rebuild international trade in a way that serves all our interests, then we're better doing that together than separately and apart. And that's what we're on a mission to do. But secondly, you've done what you said you would do. You said to the Prime Minister when he came and we visited in the Oval that you would do a good trade deal with the United Kingdom, that you would do it at pace, and that we would be first. And you have delivered that. You know, you've been true to your word. So thank you very much indeed for that. For us, it's not the end. It's it's the end just of the beginning. I mean, there is yet more we can do in reducing tariffs and trade barriers so as to open up our markets to each other even more than we're agreeing to do today. But it also provides us with the platform, the springboard, to do what I think will be even more valuable for both our countries in the future, and that's creating a technology partnership between the United States and the United Kingdom so that we can harness science and technology in order to create future industries and future jobs. And to do that together in the way we work so closely already in the national security and defense area, we can just take that to yet further areas of science, enterprise, and endeavor. So we're looking forward to doing that in the coming months. You've launched us extremely well today. It just, in my view, as the Prime Minister has said, just shows what two countries who trust each other, who are confident in each other and are familiar with each other can do, not just for ourselves, but for those, the rest of the world, who need to benefit from a bigger and better international trading system.
Thank you very much. It was beautifully stated. What a beautiful accent, too. I'd like to have that accent. Thank you.
My mother would be proud.
Thank you very much. Any questions?
James Matthews from Sky News.
Yes.
Can I ask, why Britain and why now? And you described this deal as a full and comprehensive deal.
Yeah.
And yet, I've just heard from Mr. Mattels, and it's the end of the beginning. Clearly, there's much more work still to do. With respect, are you overstating the reach and significance of this deal? Because you're a president who needs a result at a difficult time.
I think that it's a great deal for both parties. It's for us. We're opened up. I didn't know how closed it was. Quite closed, the market, as you know, the UK, and it opens up a tremendous market for us, and it works out very well, and a lot of assets. You see the chart, and those are tremendous assets. But we've been trying, and when you say why us, meaning your country, we've been trying for years, and they've been trying for years to make a deal, including when I was in the, first term. It would always be people talking, but they weren't getting it done. But for 25 years before that, they were trying always to make a deal, a very significant deal. I actually, until I looked at the numbers, I didn't realize this is a very conclusive deal, but we think we can grow it even from that. But this is a maxed out deal, not like you said it. You said it really incorrectly. This is a maxed out deal that we're going to make bigger. and we make it bigger through growth. But we have tremendous assets involved. I was surprised to see how big your country is in trade, actually. One of the biggest in technology and so many other things. It's agriculture. I really didn't know. It's depending on your definition, it's from 4 to 5 to 6. That's pretty big in the world. So I was very impressed by that. But we're going to take it to new levels. It's a very big deal right now, but I think it is going to grow just of its own volition. It's going to grow, and over time there'll be changes made. There'll be adjustments made because we're flexible. We'll see things that we can do even better. But it's very conclusive, and we think everyone's going to be happy, and the people of your country are going to be very impressed with the result, and they'll be able to buy from more people. They'll be able to price things differently. They'll be able to get some products that aren't available to them now that we make better than anybody in the world. And it's just something that it's a great thing that it came together. It's so nice because we have many countries want to make a deal, and many countries are very unhappy that we happen to choose this one, to be honest with you. But it's a long time, our oldest ally, or just about. I guess a couple of people claim that too, but let's put it right at the top. I think it's going to be something very special for UK and special for the United States.
Mr. President,
Yeah, please.
thank you, Mr. President. Reagan Reese with the Daily Caller. How close are you to more deals, and when do you expect the next to be announced?
Well, very close. We have numerous deals. I know Howard's going back as soon as this is finished. Your press conference, he's got numerous. And Scott, who's right over here, who's fantastic, by the way. You were great on television this morning. I watched you. That was you gave them a little lesson in the world and economics. But Scott's going to be going to Switzerland, meeting with China, and they very much want to make a deal. We can all play games. Who made the first call? Who didn't make the? It doesn't matter. It only matters what happens in that room. But I will tell you that China very much wants to make a deal. We'll see how that works out. Every country throughout the last 40, 50 years has literally ripped off the United States on trade, on military, on protection, on all the different things. And we are now making fair deals. And in this case, it's great because we really weren't very much involved. You have the European Union, which is, I think you made the right decision years ago. I don't know if you remember, I was opening up Turnberry the day that you were voting. And they asked me, would it happen or would it not happen? I said, no, I think they're going to go their own separate way. I think it's better for them. And they did. I think it's going to end up being a very smart decision. But a big part of that decision was always that you'd be able to make a deal with the United States. And they were unable to do that. But now they made it. And it's a tremendous, it's very important. That was always a big part of your decision on Brexit. And they were never able to make that deal. It was a tough one. And this one it's amazing with time. This one just went very smoothly, went quickly and smoothly. And a lot of common sense, as I like to say. It's tremendous common sense, but it's going to make your country much bigger in terms of trade. And it's going to make our country much bigger in terms of trade too. Yes,
Thank you. Tom Bateman at the BBC. Thank you, Mr. President. You mentioned meat.
You with who?
The BBC.
Oh, good. Very nice. They treat me beautifully.
You mentioned meat and beef exports. The UK currently doesn't accept American beef because of its own food standards. Are you calling on the UK to accept all American beef and chicken products?
Well, I think they'll take what they want. We have plenty of it. We have every type. We have every classification you can have. As you know, Bobby Kennedy is doing a tremendous job, and he's, I think, probably heading toward your system with no chemical, no this, no that. And I think we're heading that way. It seems to be, and but we have that also. So we're a very big country. We have a lot of beef. We're a very big country, so it'll be great. Yes, yes, yes.
Let's talk about American beef really quickly, and it can't be understated. I'm Brooke Rollins, by the way. How important this deal is and what this means to American farmers and ranchers. Specific to the beef, this is going to exponentially increase our beef exports. And to be very clear, American beef is the safest, the best quality, and the crown jewel of American agriculture for the world. So I think a really important part of this deal isn't just the ethanol reducing of tariffs from 19 to 0, which for our row croppers is a huge deal, but also for beef. And as we move forward, I know our incredible trade team is looking at all of the meats, all of the produce, really all of our agriculture exports. And I don't know if there's an industry that has been treated more unfairly and has suffered more than our agriculture industry. So we look forward to, I'll be in the UK on Monday, talking to my counterpart over there for next week, and look forward to moving that out across the country. The president is
I think we could say that we have the best in the world, best tractors, the best everything in the world. And they say that our agriculture is, second to none, you understand, and it'll be a great asset. People are going to be able to have options, choice, and they'll have more of it. And that usually means lower prices. How about we'll do you and then you? Go ahead.
Follow-up question for the Italian TV, Daniele Compatangelo, LA7, TV 2000, Primetime Media. So congratulations for the deal. We see a big revenues from the chart. But what's the rest of Europe? It's a victory day, but other European countries, it seems like they're losing the train.
We intend to make a deal with Europe. We have found that the European Union treated us extremely unfairly, very difficult, and hurt themselves in doing so. And they very much want to make a deal. We'll be dealing with them. We are dealing with them currently. So that'll cover pretty much the rest of it. But this was separate because of Brexit in particular. This was a separate deal. It always seems so natural. I mean, all the media would say that this seemed to be like, why did this happen 25 years? Why didn't it happen a long time ago? And it was always amazing to me. Somebody would say, hey, we got to make a deal. We have to make a deal. But this deal just fell into place. The prime minister did a fantastic job. His representatives are total professionals and they got along well. And it just seemed to work. And I think one of the reasons it did is because we blew up the whole system. If we would have just been dealing with you separately or, country by country, we blew up the whole system. It was very fair to very unfair to the United States. And I think because of that, this worked out so nicely. And I'm honored that it was the first deal. Please.
Sir, you mentioned.
Well, why don't you go in the back, yes?
Oh, thanks, sir. I'm with the London Times. I would say this is a great day for James Bond because now Aston Martins will be available to America. Will it be even better by extending it to film? You've talked about a big tariff on films, and we'd like to know if there'd be relief on British.
Well, we're going to have a discussion on that separately. And as you know, we're putting tariffs on that particular film, you said, the movie makers. And we're going to be doing some tariffs to get them because a lot of them have left this country. They all live here. The money comes from here. Everything comes from here, but they make them in other countries. So we're going to do something to bring them back, maybe to a large extent. But James Bond has nothing to worry about that, I can tell you. James Bond. And, Sean Connery was a friend of mine. Sean Connery was responsible for my getting zoning in Aberdeen. He said, let the bloody bloke build his golf courses. And, I was like 4 years into the process, and it was impossible in Aberdeen. And he just stood up one day and he said that. As soon as he said that, I got the approvals in about 2 minutes. So he was a great guy, Sean Connery, and great character.
Later in the year, are you going to Scotland and to the
UK? I will be, sure. We have a lot of investment over there. We have Turnberry, Aberdeen. We have, as you know, in Doonbeg in Ireland, right on the ocean. They're all on the ocean. I only have interest if they're on the ocean. And we have good investments over there. Been beautiful. Yes.
Mr. President, if the talks go well this weekend between Secretary Bessent and Ambassador Greer with their Chinese counterparts, not preemptively, but if the talks go well, would you then consider lowering the tariff rate on China?
Well, it could be. I mean, we're going to see right now. You can't get any higher. It's at 145, so we know it's coming down. I think we're going to have a very good relationship. I always got along very well with President Xi. That relationship was greatly disturbed by COVID when COVID came in, but we get along very well now. I mean, the relationship was hurt with a lot of people, a lot of countries when COVID came in. But I think we're going to have a very good relationship. I expect to have a very good relationship with China, Scott. I think it's a very friendly meeting. They look forward to doing it in an elegant way.
No.
China, as you know, has a tremendous trade surplus with us, and we just can't have that. But I think it's going to be very good for both countries. I would like to see China opened. You know, one of the big things here is, and nobody would know this, but the UK was largely closed. It was very much closed to trade, and now it's opened. And a lot of the financial reporters are very happy about that because so much. I listened to them. Well, I hope they get countries opened up, and then you compete on a fair basis. But you can't compete when you're not allowed to go there. China would be the number one example of that. You know, it's very closed. We almost had it last time before COVID, and that didn't work out. But we made a great deal with China. They had to buy $50 billion worth of our food products, and it was a great deal, doing very well for our farmers. And then when Biden came in, as usual, nothing happened. You know, he didn't enforce it, and it got less, and ultimately, you know, it destroyed a great deal. That was a great deal. But no, I think that we're going to have a good weekend with China. I think they have a lot to gain. I do think they have far more to gain than we do in a sense, but we're going to have I think we're going to have a very good weekend.
Will you speak to Xi after the weekend talks?
I might. Yeah, sure. Depending on what Scott says, we Scott is doing certain countries and Howard's doing certain countries. I mean, I wish I had like 10 more of each. Then we could do them all at one time. But there will be a time we'll do a number of them, and then there'll be a time. I think I can say this, Scott and Howard, where we're just going to say, because we understand the countries, we understand what they want, where we're just going to make the deal. In other words, we don't need the country involvement because we've already had it. And we'll say this particular country, which had big surpluses, let's say, we had therefore deficits, that this particular country is going to pay a 25% tariff or a 30% or a 50% or 10% or whatever it may be. I think we should explain it now, Howard. One of the things we did here that we'll rarely do is on cars, we took it from 25 to 10 on Rolls-Royce because Rolls-Royce is not going to be built here. I wouldn't even ask them to do that. You know, it's a very special car, and it's a very limited number too. It's not, you know, one of the monster car companies that makes millions of cars. They make a very small number of cars that are super luxury, and that includes Bentley and Jaguar. So we have some very special cars. So in order to help that industry, and that's really, you know, handmade stuff. And they've been doing it for a long time in the same location. And I said, yeah, that would be good. Let's help them out with that one. But that's different than a car company that comes out and makes millions of cars, which they'll be doing in our country. They're going to build. We have many factories, car plants being built or going to be built very soon. I think we can say that we'll be close to $10 trillion of investment. I think we're actually at that number now. If you add up some of the ones we haven't heard about yet. I mean, we have some going up right now. They have plants going up, and they haven't even spoken to us. They're doing it because of the tariffs. And tariffs have always been used against us. And I never understood. I used to sit back. As you know, China paid hundreds of billions of dollars in tariffs when I was president. But until then, China never paid anything. And, you know, they really did a big number on us from the standpoint of trade. But we are using tariffs now for our benefit. And we have now close to $10 trillion. Think of that, 10 trillion. If you look at the past administration, and we're talking about over, you know, essentially 2 months, because we could say 3, but it took a little while to get the office in perfect shape, right? It took a little while to get things done. But once we started, when you think of that, close to $10 trillion of investment, you've had years where the United States wouldn't do that wouldn't do 1 trillion in a year, wouldn't do anywhere near 1 trillion. We did 10 trillion in 2 months. So it's amazing what's happening. We're getting calls from, and that has to do with chips, has to do with cars. We used to make chips. We had Intel, and we used to make chips. We had a monopoly on chips. Everything was made here. And now, over a period of years, because of presidents that didn't know what they were doing, they allowed that business to be stolen from us. Most of it moved to Taiwan. And you probably were in the same position, right? Because you had a lot of the chip making capacity, but they moved it in. And if we would have said, that's fine. If you want to move it to Taiwan, that's good. But if you want to sell back into the United States, we're going to put a 50% or 100% tariff on. They would have never left. But we had people sitting here that didn't understand that. And it's too bad. But now they're coming back because I'm saying it I'm saying it about 40 years too late, but they're coming back. As you know, we have the biggest chip makers in the world spending, in one case, 300 billion, in one case, 500 billion, same as Apple, and in another case, 200 billion. And we're going to have a large share, a very, very substantial share of the chip making market.
You said that this weekend is going to be a friendly visit, but do you expect that it will just be a formality to break the ice, or are they going to get into substantive negotiations?
I believe so, yes. I believe it's substantive, yes. I think people like to say, yes, we're having a meeting to meet. Well, we're meeting, so what are we going to do? Talk about meeting again? I think it's going to be substantive. I think we can say that, right, Scott? Very substantive. Now, China wants to do something, and look, they have to at this point. You know, essentially, they made $1 trillion a year, and now they have absolutely, no business because of the tariffs. They have no business. And they want to have business, and we want them to have business. We want them to do well. We want them to do very well. So I think it's going to be very substantive.
Because business has slowed down, as you mentioned.
In China.
But we're seeing as a result, the ports here in the U.S., the traffic has really slowed, and now thousands of dock workers and truck drivers are worried about their jobs.
Yeah, no, that means we lose less money. When I see that, that means we lose less money. Look, China was making over $1 trillion, 1.1 trillion, in my opinion. Different numbers from 500 billion to $1 trillion or $1 trillion. I think it was 1.1 trillion. And frankly, if we didn't do business, we would have been better off. Okay, you understand that. So when you say it slowed down, that's a good thing, not a bad thing. But we're going to make it so they can. I'd like to say they can do better, actually, in terms of the bottom line. We'd like to see China opened up so we can compete in China and, give people something that they've never had, access to something. That'd be great for the world. It would be great for our businesses. And I think it would be great for friendship. I really expect a lot of people think I'm a militant guy. I'm really not. I think that trade can bring a greater friendship with China. It can be something good. But, one of the things that I know Scott's going to be talking about very high on the list is open up and let our businesses go into China, because when you talk about a closed country, that's a really closed country. And I think it would be great if it was opened up. It would give people a lot of choice and would create a lot of jobs, a lot of everything. So I think it would be a great thing for China. And that's going to be one of the things we'll be discussing, like we discussed with UK. Yeah, please.
So what does Britain have to do for you to drop the baseline 10% tariff?
Yeah. Well, I think that's set because that has to do with a lot of different things, including past. There are a lot of past things that we talk. This is very inclusive. We included everything, and that's pretty well set. Yeah, please.
Yeah, Mr. President, the 10% baseline tariff remaining in place, is that a template for these future trade deals? You
No.
say you keep it here.
No.
Is it going to stay in every case?
No, that's a low number. They made a good deal. Some will be much higher because they have massive trade surpluses, and in many cases they didn't treat us right. One thing with UK,
come on,
they had somewhat closed.
This is
not like
dumb.
China as an example, but they always treated us with great respect. They treated us with great respect. The template of 10 is probably the lowest end, and therefore they made that deal. But they. We've had just a very special relationship with them. Like, I won't do that deal with cars. Unless somebody shows me that there's another kind of a car that's comparable to a Rolls Royce, and there aren't too many. This is a good commercial for Rolls Royce. They're going to order a lot of cars.
Mr. President, I wonder whether you'd like to buy.
Well, the last time this happened, I ended up.
I would be happy to suggest a discount, obviously a very modest discount. We have to protect our profit margins.
I've had many of them, actually. The last time that happened, I ended up buying a Tesla.
Thank you. Mary Margaret Oldham with Daily Wire. I had a question about the UK deal today. I heard there was talk that part of the agreement would depend on whether the UK would respect free speech and freedom of religion. I know the VP is really interested in that, talked about that earlier this year. Was there any assurances that you guys got on that front?
You want to handle that?
Yeah, that was not part of the conversation. Our conversation was an economic conversation from start to finish, closed by the president yesterday. This was a business deal, open their markets and also protect their workers, grow our markets and help our
This
workers.
was about business religion. Business is sort of a semi-religion, but not nearly as important. I don't want to get myself in. Go ahead, in the back.
Mr. President, will you be asking China to help you close, the gap between Ukraine and Russia?
I think so, yeah. I think it's a natural thing to ask.
What do you expect?
Sure. I don't know. I think we're making good progress. Fighting is a little bit different than it was. I think if we weren't involved, Russia would be, going at it to maybe get the whole thing. Without our involvement, they'd be able to get it, because we supplied a lot of different things foolishly, but we've been sort of paid back by doing the rare earth deal that I talked about before. I think that I think that we will be very much involved in trying to get that bloodbath. It's a bloodbath. It's a horrible situation. 5,000. It's really more than that. But it's 5,000 soldiers on average a week, mostly soldiers, are being killed. Young, beautiful people. I mean, they're being killed. I see the satellite pictures coming back, body parts lying all over fields, heads and arms. It's so terrible. I've never seen anything like it, actually. And if we can get that stopped, that will be a great accomplishment. And we're trying very hard. And I think we're close. And Mr. Witkoff is talking constantly back and forth. He's a real professional. He's got a great relationship with both countries. And I think we have a good chance. And likewise, we're trying to work on Iran to get that solved without having to get into any bombing, as we say, big bombing. I don't want to do that. I want them to work a deal. I want them to be very successful.
Mr. President, Edward Lawrence from Fox Business. On the non-market barriers, how did you get the UK to bend? And what was the 11th hour deal or ask?
Well, I think it was really just a part of the overall. I mean, they have so many things that are so good for them. It's going to be so good for the country. And that was sort of easy. It wasn't, we had non-market, I call it non-market or non-monetary trade barriers. And we had quite a few of them, not nearly as bad as some countries. Some countries have, they have virtually no tariff, but the rest of it is so brutal you can't do business with them, right? So it's a very important question, actually. No, I think the overall deal just worked out very well from their standpoint. They were willing to give that in order to get other things. And you might want to speak to that, Mr. Abbas.
Look, the point about the deal is that we will continue reducing tariffs and non-tariff barriers. This is a continuing picture. It's a movie. It's not a still picture here. It's a movie. Yeah. It continues. And we're both committed to freeing up trade between our countries. We're both committed to freeing up investment between our countries. And the point about this deal is that it provides a very good template and a very good launch pad for what we can continue to do and build on in the future. And that's what we're both determined to do.
Many of the, well, we're going to say, many of these, we'll keep it confidential. How about just one more little thing, right? It got the deal closed, and it was handled very well from the other side too. But many of these things that we're talking about, we've been talking about this for 25 years. It's hard to explain when, if you weren't sitting behind this beautiful Resolute desk, you just wouldn't get it. I have been hearing about making a deal with UK for 25 years. And especially around the time of Brexit, they wanted to make a deal. So they came out of Brexit and they make a deal, and how natural. And it just couldn't be done. It couldn't be done. Good people. And this is a bigger deal. This is a much bigger, better, stronger deal for both of us than we ever even contemplated before. It's a big deal.
Virtually everyone said that it would end in failure, it would end in tears, and it's ended in exactly the opposite. Yeah. But Mr. President, can I say that is due to Secretary Lutnick and Ambassador Greer, who've been absolutely fantastic. But yesterday I received a call, a very diplomatic call that just edged things over the line, and that was from your new ambassador in the United Kingdom.
Who is terrific. Right?
Warren Stevens, he's here.
Where is Warren?
Right here. Hello,
Warren.
He's flying to London tomorrow night
He's going to be very popular with the British people. He's going to be a very successful ambassador. And
Were you disappointed?
And he's got plenty of cash. That guy's plenty of cash.
We need some more big spenders.
You're going to go ahead fast.
Yeah, are you planning to meet Ursula von der Leyen, the president of the European Council anytime soon?
Oh, she's so fantastic, right? She's so fantastic. I hope we're going to meet. Yeah, the answer is yes. I saw her a few days ago. And I think that we'll definitely meet. Yeah, the European Union's big thing. They want to make a deal very badly. You know, everybody wants to make a deal. Look, everybody wants to make a deal with the United States, and we're doing that. And we're going to make fair deals. I'm just honored that this was the first one. Go ahead, please.
The Federal Reserve Chairman, Mr. President, says that you would have to call him for a meeting. Do you plan to meet with him? And what do you think about him?
It's like talking to a wall. He should be.
What do you think about not cutting? The Bank of England cut.
Well, the Bank of England cut, China cut, everybody's cutting but him. It's I don't know. We'll see what happens. It's a shame. I call him Too Late, Too Late Powell. That's his nickname, and it's a shame. It's ridiculous. So meeting, he's always too late. But in this case, it's not going to matter that much because our country is so strong. We're so powerful in terms of economic strength and what we've done. And I'll tell you what, if we didn't have our first term, you wouldn't be. We created things in the first term. We cut more regulations than any president in history. We cut the taxes more than anybody in history. And a very big factor is going to be the tax bill that we have right now, the one big beautiful bill, as we call it, which is all encompassing, the biggest tax cuts ever in history, bigger than even the first time. And the incentives, even great for the UK, because it'll make us so strong that we're going to be doing more business with you. It's a very important element for taxes, for every aspect, regulation cuts. That bill is, I believe it's the biggest bill of its kind ever in the history of this country. And Speaker Johnson and Leader Thune have done an incredible job. I mean, I'll let you know, we have to get a vote, but we have a lot of support for that bill. And if that happens on top of all of these trade deals that we're doing, this country will hit a point that you better go out and buy stock now. Let me tell you, this country will be like a rocket ship that goes straight up. This is going to be numbers that nobody's ever seen before. That's a very important element of all of this. If we get that, if you don't, and the Democrats are fighting it only because they want to fight. They have Trump derangement syndrome. If it was somebody else who would fight, if you had a normal person, if you had some stiff sitting behind you, they'd be fine. But they have Trump derangement syndrome. Senator Schumer's become a Palestinian. He's welcome. I don't know when they're going to give him the ceremony, whatever the ceremony may be. It's terrible what's happened to the Democrats. So very, very important element of everything, of what we're doing. Unrelated to today, but related in the sense that we'll do, if that passes, we'll do even more business with the UK. We'll have so much. It's the biggest tax cut in history. It's going to make our country zoom. It's going to be incentive, as you know, with the deduction for basically for work. You work, you build, you plant, etc. Your deduction. It's going to be the biggest. It's the biggest bill of its kind ever passed. Maybe the biggest bill ever passed. That's why we call it the one big beautiful bill.
You just announced a new nominee for the U.S. Surgeon General who never finished her residency and is not a practicing physician. So can you explain why you picked her to be America's top doctor?
Because Bobby thought she was fantastic. She's she's a brilliant woman who went through Stanford. And as I understand it, she basically wanted to be an academic as opposed to a surgeon. I think she graduated first in her class at Stanford. And Bobby really thought she was great. I don't know her. I listened to the recommendation of Bobby. I met her yesterday and once before. She's a very outstanding person, a great academic, actually. So I think she'll be great.
Your nominee for U.S. Attorney of D.C. Do you have a backup plan if this Senate
does not? But he's a terrific person, and he wasn't getting the support from people that I thought, he's done a very good job. Crime is down 25% in DC during his period of time. I'm very disappointed in that, but I have so many different things that I'm doing now with the trade. I'm one person. I can only I can only lift that little phone so many times in a day. But we have somebody else that will be great. I just want to say Ed is unbelievable, and hopefully we can bring him into whether it's DOJ or whatever in some capacity, because really outstanding. To me, it was disappointing. I'll be honest. I have to be straight. I was disappointed. A lot of people were disappointed, but that's the way it works sometimes. That's the way it works. And he wasn't rejected, but we felt it would be hard. And we have somebody else that we'll be announcing over the next 2 days who's going to be great.
With companies like Ford and Mattel recently saying they're going to raise prices on certain products, how long do you think the American public is going to be patient?
Yeah. Well, I think they're saying that just to try and negotiate deals with me. They're not. Look, tariffs are the most misunderstood thing maybe in any form of business, anywhere in business. Oftentimes the country picks them up. Oftentimes the company picks it up. The people don't pick it up. Okay, the people don't pick it up. And if Ford did that, they wouldn't sell any cars. And if Mattel, I don't know, I'm not so sure. They also said they're the only country I've heard. They said, well, we're going to go counter. We're going to try going someplace else. That's okay. Let him go, and we'll put 100% tariff on his toys, and he won't sell one toy in the United States, and that's their biggest market. I heard that. I mean, I watched this guy talking about how I'm going to go counter. I said, well, I wouldn't want to have him as an executive too long. The Ford people I know very well. What they're doing is negotiating with us by saying that. But we don't think that's going to happen. Look, I put out a truth today, and it said that gas is down, gasoline is down, energy is down, groceries are down, eggs are down. I mean, eggs, thank you very much, but eggs are down. When I came in the first week, you guys hit me with eggs. I said, what the hell happened with eggs? Eggs were up like 170% and going up. And they said, don't order any for Easter. And we were thinking about ordering plastic eggs like everybody was doing. And Brooke did a fantastic job, agriculture. Brooke did a fantastic job. And we had hundreds of thousands of eggs out here on the lawn just 2 weeks ago at Easter. But you take a look at the cost. Energy's down. Even interest rates are down. Now, if the chairman of the Fed, Jerome, if he would lower interest rates like China did, like I think UK did, but like numerous other countries have done, it's like jet fuel. It'd be great. But he doesn't want to do it. I think he doesn't want to do it. Probably he's not in love with me. I think that's right. It's sort of a crazy reason, but that's the way life is. Anybody in his position would be like, it would be like jet fuel. But even without that, we're doing well. But remember this, I've watched you people reporting over the last few months that if we do this, prices are going to go through. Well, groceries are down. All of this stuff is down. Lumber is down. Oil is gone to, we have that thing broke 60, right? $60 a barrel. And $98, $1.98, $1.99 in some cases, and heading in that direction. No, I think it's been amazing, actually. And what that's good for, it gives the consumer more money.
That's true.
And it gives them a better life, because we just came out of the worst inflation, in my opinion, in the history of our country. They say 48 years. But Biden really screwed it up. He screwed up energy. And he also he spent too much money. He was spending it on, a green new scam. And that's like throwing the money. See that beautiful window behind? Take money, throw it right out that window, because it's the same thing. He spent $10 trillion. He wasted it. Not only was it bad, it was a negative. It wasn't even like it helped a little bit. It was a real negative. And then on top of it, they let 21 million people into our country without any identification, anything, just let them in. It's very, very sad. Well, we'll do one or two more. Go ahead. Who are you with?
I'm with the Daily Telegraph. You know me from
I do.
How concerned are you about the UK's reliance on China? Chinese money in the money markets, Chinese exports.
We're not concerned.
Is that something that came up?
Honestly, I'm not concerned about anything. If I was, I wouldn't even be here right now. If I was concerned about anything, and it wouldn't be that, but I wouldn't be here right now. No, we're not concerned. We're going to have, I believe, a very good relationship with China and a fair relationship, and it'll get bigger and it'll grow. It'll grow. As an example, if they open up the country, that'll be the best thing China ever did for itself. They don't know that yet because, it's been a different system. But that'll be the greatest thing that ever happened to China. The people will be happier. They'll buy for less. They'll see things that they never saw before, and they'll be buying them. And it'll really create great long-term peace.
And if I could ask one of the Agriculture Secretary, actually, there's a lot of concern about chlorinated chicken, the import of hormone-treated beef. Has that question been addressed, resolved in these talks, or is that something for the continuing negotiations?
Well,
James.
I would just say that it's very clear, and we have in the heads of terms that we are going to discuss all of these types of issues, and obviously the importing country, whether it's us or them, you got to follow the rules on those types of things. But our point is the rules need to make sure that they are based on science, and that's our expectation. We know the UK believes that too, so we want to come to an accommodation. We want the consumers in each country to be able to choose what they want and give them the information that they want.
And we have an incredible EPA led by Administrator Zeldin that is on this. So the talks continue, but we are very, very confident in our products, and what the president has done to open up the markets is unprecedented for these farmers here in America. Thank you.
Mr. President, Wall Street, as they watched this, you saw the stock market decline sharply after Liberation Day, and it's rallied back since then.
Well, now it's going to really rally because, don't forget, they said this is all a pipe dream. And this is a tough one. This is, somebody would say, well, this is easy. This is much tougher, I think, than any other deal because they've been at it for so many years, decades, trying to make this deal. And it's very conclusive, and it's a great deal, and it's a very big deal, actually. No, this is just the beginning. We're going to be having conferences, or at some point we won't have. We'll just put out a statement that we just signed this country, that country, and after a number of these are done, nobody has enough people to do it. We're just going to put out X country is going to pay this, and if they open up, they're going to do this and that, and they're going to be open up. Everybody wants to be here. I say this is where they want to be shopping. They want to shop in this country because we have the consumer, and we have the consumer like nobody else. And if this country went bad, the whole world would go bad. But we really saved it from going bad. Yeah, please.
So can I ask you about the air traffic control issue? Are you looking at getting new software?
I'm glad you asked me about it because I'm just going to be talking to now the heads of the airlines and everything else. So I was all set before we had the rigged election to give out a brand new gorgeous system to one company that was going to do the whole thing, one of the best companies in the world that you know very well. There are 3 or 4 of them that do it. And when they took over, Buttigieg, who has no clue, he drives to work on his bicycle with his, in all fairness, with his husband on the back, which is a nice, loving relationship. But he didn't have a clue. This guy didn't have a clue. And he's actually a contender for president. Between him and Crockett, you can have that party. But he didn't know what he was doing. And he took what they call dry systems where you have wires in the earth, buried in the earth or whatever. And then you have open air systems where you have satellites, and you can't mesh them. Anybody would know that if you went through about 2 months of study in school, if you studied that kind of thing. And he did. They spent tens of billions of dollars trying to take old, broken equipment and merging it into existing new equipment with brand new equipment. It's one of the greatest. They spent like $40 billion. And what they did is they made it worse because it doesn't work together. You can't make it work together. If you have a satellite system, you need satellite. If you don't, they had all these different technologies, some of them 50 years old, and they're trying to mesh them in. And they end up spending twice the money they should have. You could have bought a whole new system. So we have a very good guy who you all know, Sean Duffy, is head of transportation. And I've given him a 10-minute lesson, and he's become really good. And we are now in the market to buy a gorgeous brand new system. The helicopter that crashed into the plane at 400 feet, it shouldn't have been. What would have happened is all sorts of bells and sirens would have been going off 3 minutes before that accident happened if you had the right equipment, but they didn't. And the new equipment is unbelievable what it does. You can have, I was going to say something, but you always, in my opinion, you always need pilots. I want pilots, but you wouldn't even have to have pilots. This system is so incredible what they can do, but we have a system that's obsolete. And what they did is the worst. They tried to combine the really old, broken stuff with the new stuff, and you can't combine it, and anybody should have known. So Biden, you think Biden figured this out? I don't think so, fellas. Do you think he has any clue? He doesn't know what the hell's happening. So here's the story. We're going to be buying a brand new, it's going out to bid very soon, brand new state-of-the-art system that will cover the entire world. I'll give you an example. When my pilot, now I have military pilots, but prior to that, I have very good pilots, great pilots. They would land, and I won't tell you which country, but they would use the system of another country. They wouldn't even use the system of the United States. So if I'm landing in New York or Florida or Tennessee, they're using a system from another country. I said, why is that? And they were, they're not into business, but they're just saying, our system doesn't work, sir. And I said, boy, that's pretty sad. But we were all set to give it out to, look, you have a Raytheon and you have different companies like that, numerous companies. And you have companies that would do it, like an IBM, as an example. And you give out one deal, one contract. They gave out hundreds of contractors. They had diggers. They had non-diggers. They had people that focused on satellites. They had hundreds of different contracts. One contract where one guy is controlling everything. You need a trench, then they dig a trench. But if you don't dig the trench, they don't blame you. What happens is you don't dig it, then they say, we want a cost overrun. Now, we have it all set, and we're going to be doing it. We would have done it, except that the election took a little strange turn. But the second one didn't. That was too big to rig. Thank you very much, everybody.
Oh my Lord. Wow. We gotta recap this because boy, this was a 3-hour and 15-minute live stream. I just want to get another cup of damn coffee. What the hell? Anyway, we're gonna do a full recap of this, and remember, if you want notifications for all the videos, if I'm going to be live streaming on this channel for market opens and stuff, you're not going to get all of the notifications. So use the Meet Kevin app to make sure you subscribe to the notifications you want. You can get that in the Android or Apple App Store. All right, so we need to do a summary of what's going on here. The market's very happy about this. And we're going to break down the reality of some of what's going on here and do a full recap of everything that Donald Trump just announced. So we'll get started here in just a moment. In fact, let me listen to her just for a moment.
Secretary Scott Bessent has previously characterized that these would be agreements in principle. Now, importantly, and as you outlined, it does keep in place that 10% baseline tariff across the board. But also, when it comes to those sector-specific tariffs, the United States has agreed to drop the steel and aluminum tariffs from 25% down to 0%. And the UK will also be allowed to send in 100,000 cars into the U.S. under a 10% tariff. It is also our understanding that the United Kingdom will be given preferential treatment moving forward when it comes to additional sector-specific tariffs that could be coming, including on pharmaceuticals, chips, lumber, things like that we are expecting could be coming in the coming weeks. Now, for the U.S. side of things, the deal will increase market access for some U.S. goods, including industrials like machinery. Also, ethanol is an important one. The United Kingdom says that it will reduce its tariff on U.S. ethanol imports down to 0. Also, chemicals, and then U.S. agriculture. This is one that we had been watching really closely because it really has been a sticking point between these two countries. The Agriculture Secretary Brooke Rollins in the room saying that this will impact U.S. beef imports in particular, but the United Kingdom maintains that they are not lowering their food standards when it does come to these imports. What the enforcement mechanism is going to look like when it comes to these purchase agreements does remain to be seen. And also importantly, as you mentioned, the Commerce Secretary Howard Lutnick saying later today a $10 billion announcement when it comes to Boeing aircraft.
It was Tyler Kendall at the White.
Okay, got it. All right, great. So, look, all right. Well, Donald Trump just had his first major comprehensive trade deal announcement, and boy, oh boy, the Trumpers are out in force today. Loving this. Donald Trump said, buy stocks because they're about to rocket ship. During the press conference, especially when Trump said that, people started buying. We've got Bitcoin at 101,000. We've got the Qs at 491. We've got Apple up 169. We've got Restoration Hardware almost at $200. We got Tesla up 4.5%. Nvidia is almost at 120. Why is everybody so enthusiastic? Because in fairness, it is finally the first deal coming about a month and a week after we have announced liberation. And so there's enthusiasm that this is just the beginning. Unfortunately, that enthusiasm could wane in the face of some of the details that we heard and around the signals of Donald Trump's intentions for tariffs. This morning, I think Ted Cruz made a very good point on CNBC when he suggested there are really two paths that the White House can go. Path number one is you could end up seeing a White House that uses tariffs as a negotiation tool. This is what we saw during the campaign, where people thought, okay, Trump's going to use tariffs as a negotiation tool. We'll, hit people with hard tariffs and we'll try to negotiate tariffs to zero and we'll try to get net lower in tariffs. That is a free trade outlook. And it's one that I believe will be the future. I think in the future, we will be back at zero tariffs, whether it's during the Trump administration or the next administration, whatever that may be. Unfortunately, there's also this other potential, as Ted Cruz pointed out, which I think he's right about, that the White House might actually be interested in maintaining a heavier set of tariffs because they desire the tariff revenues that come with these taxes via the so-called External Revenue Service. And this is a little bit problematic because it could mean we end up sticking with tariffs for a longer term and crushing that international trade more so than expected. And Donald Trump, unfortunately, seemed to lean towards that latter of the two today, which in my opinion is less good. See, Donald Trump, when asked about lower imports from China and potentially dock workers losing their jobs, Donald Trump responded and said that was a good thing, that means we're importing less from China, and these layoffs are actually a good signal. I don't know of anybody who would characterize as our ports slowing down and imports slowing down is typically a good thing, unless you're really just trying to look to bend the knee to Donald and Donald's vision of the world, which is one of trying to bring us back to the mid-1800s, before we had Social Security, before we had Medicaid, Medicare, before we had a military that's 100 times as strong as it is today, where tariffs were able to support a lot more of our government because our government was a fraction of the size. Donald Trump is essentially suggesting, hey, the deal that we're doing here is a low end of the baseline. And this is really your sort of second red flag. So number one red flag is you have a Trump here who sees a comprehensive deal as really an incremental deal and is willing to sacrifice layoffs in America for the benefit of trade deals that are economically destructive. The second problem is the baseline that was just created through this trade deal, this comprehensive, massive trade announcement, was quite frankly a flash in the pan and a joke. Let's be real about it. The trade deal announced with the United Kingdom reduces tariffs on the United Kingdom from 10% to 10%. In other words, what we've actually done is we have net increased tariffs on the United Kingdom. See, tariffs on cars coming from the United Kingdom were substantially lower before Liberation Day than they are today. Now, yeah, in the meantime, we did end up with 25% tariffs for a brief period of time on steel and aluminum and autos. Now those are reduced to 10%. But the 10% reciprocal tariffs are still in place, as are 10% tariffs on the first 100,000 vehicles being imported from the United Kingdom. So in the event that you're looking to import a Jaguar, Aston Martin, a Lotus, a Bentley, a Mini, a McLaren, these vehicles are now going to be subject to 10% tariffs, which are still more than what they had before Liberation Day. They're just a little less than what we had in April. Actually, quite a bit less if you think about it, from 25% to 10%. But again, we have net increased tariffs. So we have more taxation on foreign imports. And this is with a country we have a trade surplus with. So Donald Trump told us that this 10% that the United Kingdom is being saddled with, mind you, they are a surplus country, that is because they are our friends and that they're good to us. On other countries, the tariffs are actually going to be a lot higher. that 10% is the low end. Well, what Donald Trump just actually told us is that negotiated tariffs might not be negotiated down, they might actually be negotiated up with other countries, which is literally the opposite of what we want to hear to avoid the potential of a Q2, Q3 layoff disaster. See, Donald Trump cheers lower energy prices, and that's true. We have lower energy prices, but part of that is because the oil markets are discounting for a recession, which is not good. People, institutions, and hedge funds are selling more stocks than ever before. Now, who's buying more stocks in crypto than ever before are retail investors. And obviously, we're going to probably face a reckoning in the next 6 months here, where either we confirm that we could stick a soft landing, in my opinion, through more free trade deals, or through more tariffs, we end up sticking a recession, and then institutions and hedge funds will be right. We'll see who ends up being right, but take a look at this chart. I think this is actually a very interesting chart because it shows you here from Bank of America Securities that hedge fund flows on a 4-week average have been negative since December of 2024, so December, and they have been the most negative that we have seen at any point in the last 17 years here. This is a remarkable net selling from hedge funds. If you then look at institutional clients, we have not seen this level of institutional selling since the period between 2016 to 2018, 2018 particularly being the last trade war. Whereas this is the most net buying that we have seen from retail customers ever in the last, moving average of the last 4 weeks here. Since December of 2024, which is pretty remarkable. Now, what this really means is you have this divergence. You have a lot of people who believe that Donald Trump's tariff plans are going to be a benefit to the economy, and so they're putting their money where their mouth is. The problem with that is if institutions end up being right, you're going to have a lot of Americans pretty damn pissed off in the second and third quarter. Right now, we're still coming off really good Q1 data. We've got good Q1 hard data, bad Q1 soft data, but hard data is good. We've got really good news on Q1 earnings. And so far, layoffs still look pretty decently low. And so, again, this enthusiasm around, yay, we got our first trade deal, that's the headline. But for analysts who are actually watching, and markets today are really apparently reacting to headlines here. I mean, Tesla's up 4.5%. It's a great move in markets today, which is also somewhat unexpected. But what you find is that what we've actually done is we've now created a precedent for future trade deals that actually isn't that fantastic. Now we'll go through some more of the details of beef and aircrafts and so on. But let's understand the precedent that we've just created. So the precedent Trump created is the following. Trade deals are going to be 10% tariffs at the low end, and any deal might only see a waiver of certain industries, but otherwise tariffs will stay. Otherwise, tariffs will stay. This is not great, mostly because there was a lot of enthusiasm that tariff deals would actually be used to get us to 0-0 trading environment. There were rumors that, India might bring us to a 0-0 trading environment. And this is actually the deal that India struck with the United Kingdom. India and the United Kingdom just struck the greatest trade deal since Brexit. And it was a 0-0 tariff trade deal, which is actually really bullish for the economy. And frankly, if we can get 0-0 trade deals, that's great. This would 0-0 means no recession. Okay, 0-0 means no recession. We get a tax deal. And that's our rocket ship. This would be very bullish. In my opinion, a 10% tariff at the low end, and that a unprecedented comprehensive trade deal is a 10% tariff at the low end, and then a waiver on beef tariffs. That's insane. That's bad. So the tariff deal we just got with the UK, in my opinion, is horrible. Now, it's going to take months for markets to realize that pain. That's okay. It doesn't matter to me anyway. You know me, I invest in house hack. It doesn't matter to me. I look at this as objective. You know, people always usually the extreme MAGAs are like, Kevin's just mad his puts are not making money. I'm like, I don't have puts. I don't have shorts. And then on the other hand, people are like, Kevin's just mad stocks are going down. It's like, it makes zero difference to me. I don't give a flying crap because I invest in house hack because I personally think house hack's an easy double, but that's my opinion. I'm biased. But that's where I throw my money right now, especially in these times of uncertainty. Yeah, we're doing a non-accredited fundraise, and of course, there's risk with any investment. Go check that out over at househack.com. But, you know, these notes about this being a completely historic deal that has been worked on for 25 years is insane to me. Howard Lutnick says, we're going to do more deals like this. Donald Trump is such a good negotiator. And what did we get? We got a waiver of ethanol tariffs, 19% to zero. That's great. But we've actually net increased tariffs in the world, which is bad. Tariffs that the United Kingdom applied on us previously were somewhere around 1.1%, really low. Today, with these new assignment of tariffs, we are creating net damage to our economy, but whatever. The United Kingdom has a trade surplus with us of about $12 billion. Howard Lutnick sort of adjusts this and suggests that we're actually more 0-0, that we're more at par. And Donald Trump doubles down on this idea that we don't want trade with China, that China needs to do a deal with us, and that they're anxious to do a deal with us. I think that's really interesting because it's kind of the opposite of what the Chinese ministry is saying. Now, obviously, you always have to be careful about what, you know, China's saying, because obviously they're going to promote their own interests, just like Trump is going to promote, our own. So it's always hard to evaluate exactly what we should expect. But this meeting or the meeting that's happening between Besant and the Chinese delegation in Geneva this Saturday is at least being characterized by the Chinese as a meeting being requested by the United States. See, I think this is very interesting. Look at this. Following China's recent announcement of upcoming trade talks with the United States side, the United States has stated it will not lower tariffs before negotiations begin, and has implied that talks were not initiated by the United States side. What is China's comment on this? So basically, you know, the United States is implying China is desperately trying to get this deal. China's POV is that, no, the United States side reached out to China through various channels, actively conveying its desire to engage with China on tariffs and other related issues. After carefully assessing the U.S. messages, China decided to agree to hold discussions. Talks are being held at the request of the U.S. side. Second, it is China's consistent position to firmly oppose the U.S. abuse of tariffs. China will resolutely safeguard its legitimate rights, interests, and uphold international fairness and justice, and defend World Trade Organization rules and the multilateral trading system. Mind you, this is at the same time China is making deals with a lot of our trading partners, and these are, you know, oftentimes free trade deals, which we're not making free trade deals. We're making like slightly free trade deals with lots of, you know, baseline tariffs. I don't understand how anybody's really celebrating these tariffs, but whatever. Third, the tariff war was launched by the U.S. side. If the U.S. genuinely wants a negotiated solution, it would stop making threats and exerting pressure and engage in talks with China on the basis of equality, mutual respect, and mutual benefit. China will never accept a situation where the U.S. says one thing but does another, nor will China seek an agreement at the cost of principles or international fairness and justice. Now, obviously, this is China's POV, so who knows, right? You know, everybody's got their own propaganda, so you kind of have to keep that in mind. But it's interesting because you see that the meeting doesn't sound very optimistic to begin with. If anything, it sounds pessimistic. Now, there's a lot of hope in markets right now because markets seem to be expecting that we're going to get some kind of pause or suspension on Chinese tariffs this weekend, and maybe we will. But I don't think markets are rallying on this UK trade deal because this UK trade deal is crazy. And if tariff talks fall apart this weekend, there's probably a good chance you see a sell down from levels where we sit now. Now, Donald Trump, again, optimistic that we're going to get some kind of substantial trade deal this weekend with China. That seems highly unlikely, mostly because when we look at history, it's not what happened in 2018. In fact, Donald Trump himself today reiterated that we would have had a deal with China if it were not for COVID. In other words, even after 9 to 12 months of negotiations with China in 2018, we still, into the beginning of 2019, we still didn't get a deal done with China. Donald Trump talks up about how we helped our farmers in trade deals in 2018, but that's actually factually incorrect. What we really did is we helped Brazil. We helped a lot of the international community support the Brazilian farm market at the expense of American farmers. And then we had to bail out our American farmers because we did so much damage during the trade deals of 2018. So history doesn't look very kindly at the trade deals that Donald Trump is talking about and maintaining tariffs. History looks very kindly at the idea of free trade and getting away from these tariffs. So this idea today that this comprehensive deal is steel and aluminum tariffs set to zero tariffs on beef imports and exports, and only 10% tariffs on UK-made cars, I think is nice because it's a symbol of a start, but it's concerning when Donald Trump says 10% is the low end, 10% is here to stay. And I don't think it sets up a really good stage for the long term of future trade deals. If anything, the hope that this would create a template for future good trade deals is actually the opposite. We're creating bad precedents for trade deals. Now, of course, when Donald Trump tells you to buy stocks, hey, in fairness, the last time he said buy stocks, he was right. So who knows? Maybe in the short term, he'll be right here, right? So, hey, maybe that's a good thing. Small caps are up like 2% today. There's a lot of enthusiasm here. I think, unfortunately, it's being built on a very false reality because, to me, this is a sign from Donald Trump that we don't actually have true intentions of actually eliminating tariffs. Instead, we have true intentions of enhancing tariffs, more tariffs, which, again, on Truth Social, Donald Trump says is going to generate all this sort of revenue. Doesn't account for the fact that you're actually crushing the very trade revenue that you're trying to tariff. And it doesn't account for the funny math of, Donald Trump suggesting that we're going to raise $10 trillion of capital investment in the United States. That seems very unlikely to happen because, again, history doesn't favor those announcements very well either. We look at Foxconn 2018. We see trade deals that were announced and that ended up only fulfilling about 6 to 8% of their promise in the way of actual trade investment or infrastructure investment and jobs creation. So history says what we got today is bad. Momentum and enthusiasm says what we got today is good. In other news, we did just get white smoke rising from the Sistine Chapel, which suggests that a new pope has been selected. So this is really interesting. That means that today we will know who the new pope is. And hey, who knows? Maybe it'll be Donald Trump, at least according to some members of Congress who think that that is actually a wise thing. Anyway, so that'll be interesting. We'll get to see who a new pope is to. But there's a breakdown on this historic trade deal. Mind you, this historic trade deal was also delayed for about 50 minutes because apparently the deal was still being negotiated, which is crazy. But whatever. So there it is. Thank you so very much for watching. Make sure to get the Meet Kevin app to always get notifications. We'll keep you updated on my thoughts on everything that's going on in the market. For now, go see who the new pope is going to be. Thanks for watching. We'll see you in the next one. Goodbye and good luck.